Good afternoon, ma'am.
Madam, good afternoon.
Yes, sir.
Yeah, shall
Good
we
afternoon,
start?
Raghavan.
Yes, sir.
Shall we start the meeting, ma'am?
Yes, I
Yeah.
told you to.
Yeah. Priya, start, please.
Good afternoon, all of you. Today we have hosted by Chengalpattu District Branch. I request Sri Satyanarayana, C.A. Satyanarayana, to give a welcome address.
Thank you, Priya. On behalf of Chengalpattu District Branch of SARs of ICI, I welcome C.A. Sri Priya Kumar, Central Council Member and Chairperson, Company Law and Corporate Governance Committee, ICI. I welcome today's speaker, C.A. Bhavani Balasubramanian ma'am and C.A. Padma Shri Krishna. And I welcome all the delegates for those who enrolled the 5-day virtual workshop on the corporate laws. I wish a grand success for the program and the efforts taken by our corporate law committee chairperson, CA Geeta ma'am, and the coordinator, CA Priya, our treasurer. I thank you one and all. I welcome for this 5-day program. Thank you. Thank you, Priya.
Yeah, you're muted. Please unmute.
Priya,
Thank you.
unmute for this.
Thank you, Chairman. I request C.A. Geeta Madam to offer the program address.
Thank you. Good afternoon, everyone. Respected CCM and ICA Corporate Law Committee Chairperson Sri Priya Kumar Madam, Speaker of the Day Bhavani Balasubramanian Madam and CA Padma Shri, our Chairman CA Satyanarayanan, Vice Chairman Sivagurunadan and Secretary Narasimha Ravan and all dignitaries. On behalf of Corporate Law Committee of Chengalpattu branch of SARC of ICI, I welcome you all for this 5 days refresher course on company law. When our chairman discussed about organizing a week-long program on company law for the benefit of our members, then we decided to approach Sri Priya Madam, who has been instrumental in organizing this grand virtual refresher course. And she has taken all the pains to fix all the renowned speakers from all over India for the benefit of our members. Thank you, Sri Priya Madam, for your great help in this manner. And I'm sure all our members will be benefited by this refresher course, because ignorance of law is no excuse. Though our members are not practicing in company law, our clients are getting various notices, and we must be able to advise clients at the appropriate times on every matter, especially penalties and late fees. That is taking the time and life of the clients as well as the professionals at a later date. It's better not to repent later than to do something in the beginning itself. It is our next audit season has already begun, and listed companies audit are going on for many of the professionals. So what we thought is we have organized this program in 10 sessions, 2 sessions every day. The various topics covered are Schedule 3 amendments, professional opportunities for chartered accountants, overview of LLP, CSR compliance, key safe controls, audit reporting, operation and mismanagement, CARO 2020, corporate governance and role of auditors, fraud, risk in financial statements, recent regulatory mechanism by ROC, penalties and late fee, and in e-governance, and exempted sections to private limited companies. And these are the important topics we thought we will organize for the benefit of our members. My dear members, please attend on all days and enrich your knowledge. I thank the chairman of the branch and ICA Corporate Law Committee Chairperson, Sri Priya Kumar Madam, for organizing this in the wonderful manner. Thank you, Madam. Thank you, Chairman. Thanks for the opportunity.
Thank you, Madam. Today we have with us a very special guest. In fact, who's been the only person, I would say, who's really helped us in organizing this whole program. And she's always been there with us and supporting everything we have organized with respect to the corporate law. So she does not require any special introduction. And she's been working a lot before and after her position as a CCM. In fact, after she's taken up her position, she's been doing a lot with respect to MCA activities. Especially, I would like to emphasize here with respect to the version 3 of MCA, where all of us have been struggling. And I personally know that every day she's been spending a lot of time in setting things right. Thank you, madam, for your presence with us today. Please, madam.
Thanks. Thank you so much. I hope I'm audible.
Yes.
ma'am.
Yes, ma'am. Yes, ma'am.
I would have loved to be there today in person, but today we had the regional council meeting. In fact, Mr. Sundararajan is doing a lot of work on the accounts today, so he's unable to join. So on behalf of the Corporate Laws Committee of the Institute of Chartered Accountants of India, I take great pleasure in extending a very warm welcome to all of you to this really, really nice program that's been structured by the Chengalpattu branch. To be very honest with you, the role that we played was very, very small. We did only two things. One, we gave some confidence to the branch to host this program. Second, we did do some help in fixing up speakers on an all India basis. So that I thought it's nice for somebody wanting to get fresh perspectives. It was very, very nice. So I think we've had an explosion on the corporate law space of late. We've had a CLC committee report that's been issued recently. And my special thanks to Mrs. Bhavani Balasubramaniam, who has been there, helping us with the responses to the report. I think she would have been there for not less than 10 to 12 hours over 3 days. We'd set up a very nice study group to do this. There's a lot of action. The other thing that Priya spoke about was LLPs. Just want everyone to understand and appreciate that this is a very painful transition, not only for us, but for the ministry as well. It's like repairing an aircraft which is running. So we are absolutely committed to helping the fraternity to minimize any kind of challenges that you may have. So there are thousands of forms which have got filed, but some of us as individual users seem to have very specific bugs, for which we've done a lot in the committee to see how to, make this process seamless and smooth as much as we can. So in fact, there's going to be a train the trainer workshop where we request every single participant in the session to fill up a Google form, which you would have received from ICAI. We want to set up something like 1,000 trainers across the country who can train people on how to work on these LLP modules. It's actually very simple. It's just that we want to do an outreach program. As far as this program is concerned, to the chairman of the branch, CA Satyanarayana, CA Narasimha Raghavan, CA Shivagurunathan, CA Priya, CA Geeta, and anyone else who's there in the program who may have missed. I think it's an exceptional effort in putting together this program. And if I have to mention, Priya was absolutely nervous about participation. That's when we actually told her it's really okay, even if it's just 10 people. It doesn't really matter because our speakers are very indulgent. I'm sure Bhavani ma'am or Padma Shri Krasto are not going to be very upset if a smaller number turns out. But I must also place on record that this is possibly one of the recent programs, which is a paid seminar where we are seeing a participation of close to 100. And as I speak, I can see almost 100 people coming in. And it's a big, big round of applause to Priya, to the chairperson, and to everybody in the branch who's made this happen. And with these few words, I have a longer session one of these days. In fact, we had called in Mr. Vijay Kumar, Mr. MP Vijay Kumar, but he unfortunately had a commitment on May 12th. And I'm only a substitute speaker on that day, but I hope to do some justice. So I'm sure this program is off to a brilliant start, and hope you all really enjoy this program. And I'm sure this is going to be very nice. And second thing about the topics, I'm yet to come across a seminar where I think it's been so extensively and neatly dealt with. It's almost like everything I wanted to know about corporate laws in the recent times, but I was afraid to ask. So this seems to be some kind of a program where exactly what you know is packaged very, very well over a 5-day period. So all the very, very best. And thank you so much for having invited me for this session, and happy to be of help anytime you want. Thank you. Thank you to everybody.
Thank you, madam.
Thank you. Thank you.
In fact, we have almost had 170 registrations. So very happy and glad for all these. Thank you. I request C.A. Narasimha Raghavan, our secretary, to offer vote of thanks.
A very good afternoon to all. I, on behalf of Chengalpattu District Branch, convey my thanks for start of this excellent program. The start, a good start is often. I think we reached 100. So I think it is a very good start for a program. As Madam said, I just asked Madam, how can we take corporate laws in an easier manner to the members? This is the question. And she said, we will have a course for 5 days, for 3 hours, for 10 speakers. We just list out the topic in a manner such that it will be easier for the members to just understand what it is. I requested our corporate law committee chairperson and also our coordinator to do all those things. Background work has been done by the entire team, corporate law committee team, including identification of topics and the speakers. However, I wish to place on record the support we garnered from our Central Council member, Shripriya Madam, on both with respect to topics and also with respect to speakers at all levels, at all times. We never hesitated to call her at any point of time. Of course, if our message is late, she is able to reply. She will be replying to us, and she will be a pillar of strength for our entire branch activities. I thank Shripriya Madam for her excellent support all these days. I thank our MC team for the support for this program, who have been instrumental and who have been always with us for any program of the branch. Anything we require, our team is always there. And 9 members, we are 9 pillars of the branch. Like that, they are always there. I thank all the MC members. I thank our ex-officios, C.A. R. Sundararajan sir and Rekha Madam, for again the kind of support. Nothing can never be spelled out in words. It is actions, their actions, which is expressed in support. And I thank, special thanks to our corporate law team, corporate law committee team. They have proved that a branch can do wonders with this program. I give a special thanks to corporate law team. I thank all the members who have been supportive of all our programs all these days. And I request all the members to continue our support so that it will be easier for us to reach and bring so many additional requirements for us to practice on a daily basis. Whatever we require on a daily basis, we can practice. I request all the members to support. With this, I also thank the speakers, with the first day speakers, Bhavani ma'am and Padmashri ma'am, for their acknowledgement and support, immediate acceptance of our proposed speaker suggestions, and the other speakers to come. I also thank. With this, I conclude my inaugural vote of thanks, and I move on, transfer this to Priya Madam for the program. Thank you all once again.
Thank you, Secretary. I now make the session open. I request Shri C.A. Sandhya to introduce our speaker, C.A. Bhavani Balasubramaniam.
Thank you. Namaste to one and all present here. I consider this as my personal privilege to introduce Mrs. Bhavani Balasubramaniam, who is a lioness and an icon of pride to our community of chartered accountants. She needs no introduction, yet we do not want to miss the opportunity of listening to her rich and varied profile to get inspired. So I start here. Mrs. Bhavani Balasubramaniam, a chartered accountant and company secretary, is a former partner with Deloitte Huskins & Sells and Fraser & Ross in audit and assurance services. She comes over with 40 years of rich experience in auditing of listed companies, multinationals in different industries in India and abroad. She is presently an independent director in the boards of public companies. She is presently the chairman of Women's Business Council, Madras Chamber of Commerce, an invitee member of the Corporate Laws Committee of the Institute of Chartered Accountants of India. She has been a member of the Confederation of Industry at the national level on financial reporting and on Southern regional level on economic policy subcommittee. She is also a member of General Committee of Madras Chamber of Commerce and Industry. She has been the chairman, co-chairman of various expert committees for many years affiliated to Madras Chamber of Commerce and Industry, the National Company Law and Corporate Affairs Committee in the Associated Chambers of Commerce and Industry, Hindustan Chamber of Commerce, Chennai 2 Financial Reporting Review Group, Financial Reporting Review Board. To associate more closely with her, I feel glad to announce that She is a member and special invitee of the Auditing and Assurance Standard Board of ICAI for over past 6 years. She is also the peer reviewer of the Institute of Chartered Accountants of India. Not just that, she has authored 10 books, the contents of which has been conceived and implemented by her and published by the Audit and Assurance Standards Board of the Institute of Chartered Accountants of India. Similarly, she has also authored e-learning projects on standards on auditing for the ICAI. She conducts risk-based audit training for Controller and Auditor General of India, Bhutan, and other government auditors. To add more feather to her cap academically, Mrs. Bhavani Balasubramaniam had become a company secretary in 1983, and she had secured the 7th rank and a merit scholarship in the intermediate examination. It's indeed such an honor to welcome Mrs. Bhavani Madam, who shall, from her vast repository of knowledge, enlighten all of us on Schedule 3 amendments now. Over to Madam.
Thanks so much, Sandhya, for the very passionate and impressive introduction which you have given. I'm really thankful that you have spent time trying to make it as creative as possible, which just shows the interest and the commitment people at this branch have to the Institute's activities, for which I'm thankful, because each member of the profession has to give back something to the profession at large. My mentor used to say that the profession did not take anything from you to make you a professional. So make sure you give back to the profession. And that's what I have been following right from the beginning. I'm proud to say that not a single program or opportunity where I was requested to speak to professionals over the last 42 years, I have declined. And I've been successful, and I thank God for making it possible that I have been with people. As Sri Priya said, the number doesn't matter to me. Many a times I used to be moved by very senior people who used to come physically to the ICAI office to listen to me on the standards of auditing when they were all revised. And the whole thing was reframed from 1995. And they were the people who cheered me and encouraged me to take up this to serve the profession. And it's been wonderful. Thank you all so much. And I've tried to make this presentation, which is highly technical, sort of interesting. I have just a few requests. One is, I'm sure all of you have greeted each other, and therefore, please refrain from sending any chat messages which are of a social nature. That's one during the presentation. Number two, although the host has muted all of you, please do not unmute and allow the other noises to interfere with other people who are listening. The presentation would be shared with the branch, which will be releasing the presentation. So kindly concentrate with me on the contents, and then the presentation notes, you can use them later. So with these few words, I start my formal presentation by thanking Mrs. Sri Priya Kumar, Mr. Satyanarayan, Mr. Narasimha Raghavan, and the other office bearers of the Chengalpattu branch, and Priya in particular, and of course, my dear friend Geeta, for making this happen. So just to check whether you're able to see the slideshow. And is my voice clear?
Yes, ma'am.
Yeah, with the inclemental weather, I hope and I pray God that there is stability from all sides for us to run this program. Transparency is for those who carry out public duties and exercise public power. Privacy is for everyone else. Glenn Greenwald, what a wonderful quote, which is just reflecting the rationale of these amendments. These amendments were done with the single objective of promoting transparency in the presentation of financial statements and the financial information. More to bring to light and restore the public confidence on the auditor's attestation and the set of financial statements, because it involved public stakeholders and their investment stakes. Privacy was always reserved for everyone else, and therefore transparency was the mantra and the rationale of Schedule 3 recent amendments. We have an agenda which will discuss the changes in disclosures by way of the additional information which is to be given to stakeholders, the format changes, and the changes in the auditor's report. I'm aware that the auditor's report is going to be dealt with in detail, but I would restrict myself to the basic references for the changes in the report, not the CARO. What is the rationale behind these amendments in Schedule 3? The expectation of the corporate regulators. The regulators have been wanting to enforce and enhance corporate governance and financial reporting to meet world standards. And for some reason, they have found need for improvements every now and then. And the expectation of the corporate regulators based on the findings under each scenario makes them increase this benchmark. And therefore, the expectation of the corporate regulators has come to play when we looked at the changes which are made. The increased activism and the pressure on the regulators to act and act fast needed a much more robust reporting system. And the financial statements, when they started scrutinizing as a basis for the truth and fairness of them, they found that it is taking enormous time for them to collect evidences and to get to the root of transactions, although the financial statements have conveyed a lot of information. And the activism and the media were not patient enough for them to carry out their regular work. Therefore, there was a need for ready information from the financial statements. And the financial statements had to bring out all the information which the regulators would require for their review, investigation, fact-finding purposes. The recent spike in reported frauds revealed quite a few areas where the information which was furnished so long probably lacked in substance or had gaps which were treated as successful planning areas for people to do what we call selective reporting, because it was not spelled out in the law. I don't have to go and reveal all the details. And therefore, when the frauds happened, what were looked at as frauds in the eyes of the regulators were probably accepted accounting adjustments, or were probably those which were enough to be reported and nothing more was required to be reported, because that was the letter of the law as it was spelled out in a particular clause or a particular section. And therefore, there was a need to make the reporting more emphatic, more specific, and more pointed and focused. And that's why all these changes have come. And the accountability and the responsibility of the auditor has been significantly enhanced under the CARO requirements. And if an auditor is supposed to report under CARO 2020, it is the primary duty of a corporate entity to make sure that they report this information in the financial statements. The auditor's report can only opine on the financial statements and cannot give fresh information, which is probably not contained in the financial statements. Since CARO 2020 came about with changes, there was a compelling need and there was no choice to make the changes in the amendments in Schedule 3. So that's how I would link Schedule 3. For those people who have already read the CARO 2020, you are only going to mirror the information which is going to be seen in this Schedule 3. If you want me to tell you like a Tirukural summary, if you have read the CARO, then Schedule 3 is only an opposite mirror image of that. So I love to make things very simple, but that is the truth, because this should have ideally, Schedule 3 should have come out before the CARO requirements, but better to have them now. And the fact that CARO implementation has been also postponed, the time is right to make sure that both reportings go hand in hand. When we look at the amendments to the Companies Act 2021, the Schedule 3 amendments were announced on 24th March 2021, just on the onset of after 1 year of all the problems which we have had due to COVID, the Companies Accounting Rules 2014 and the Companies Audit and Auditors Rules 2014. These gave the Schedule 3 amendments for the Part 1, Part 2, and Part 3. The Part 1, which is balance sheet and the statement of changes in equity, and the general instructions for the balance sheet. Part 2, which is the P&L and general instructions for the P&L, and Part 3, which is the general instructions for consolidated financial statements. The changes came about as 3 divisions. Division 1 was the reporting requirements under Schedule 3 for those companies which followed the IGAAP. Division 2 was the reporting requirements for those companies which have started following the Ind AS, and division 3 was for the NBFCs. So we need to understand that there are 3 divisions in addition to the part 3, the 3 parts which are there in the schedule 3. So therefore, one has to look at the correct division for reporting purposes, because right from the format of the balance sheet up to the reporting requirements, they differ. The Institute has released 3 guidance notes. So I would request you people to download the guidance notes and use them like the Gita, Bible or Quran when you are doing the audit of these respective companies. So when you look at the presentation for the Ind AS companies and the IGAAP companies, the balance sheet format is in the order of permanency, whereas for the NBFCs, logically, it is in the order of liquidity. The compliance with Schedule 3 and Ind AS 1 together make the comprehensive reporting under the Companies Act for annual financial statements. And therefore, the Schedule 3 amendments which we are going to look at is only a part of the changes which have come. The original Schedule 3 and the Ind AS 1 are not being covered here. Maybe there would be passing references. So this presentation cannot be taken as a standalone comprehensive checklist for your Schedule 3 presentation, because this presentation is only going to talk about amendments. There are matters which relate to rounding off, which we will look at a little later on total income or less than 100 crores and over 100 crores. And for the purpose of presentation under these financial statements, the concept of materiality has been dealt with in the same definition as we have seen under the auditing standard, that which is important to influence the decision of the economic users, and each item has to be presented according to the class of materiality for similar items. If the law and the Ind AS differ, prepare the accounting statements in accordance with the law, because the law precedes the Ind AS, and make respective disclosures. We are aware of these aspects as in the past. When we talk about the first aspect on share capital and shareholdings of promoters, but before that, I thought just let me run through the balance sheet contents for the order of permanency. Just let me read out for your own recap in terms of permanency or in terms of the order of requirements for NBFCs. When you start with the order of permanency, it would start with the fixed assets and then move down with the investments and then to the current assets and so on and so forth. Whereas in the matter of liquidity for NBFCs, it would start with the financial assets, non-financial assets, and so on. Similarly, on the liabilities, it would go in the order of permanency for the Ind AS, and it would go in the order of liquidity for NBFC, starting with payables and then going up to equity. The first disclosure, which is relating to share capital, is with reference to the shares held. All of us are aware that under section 284, shares include stock, and shares represent the interest of a member, which is measured for liability and for dividend purposes. So the disclosure requires that the shares held by promoters at the end of the year are to be disclosed promoter-wise, class of shares-wise details, and the percentage of change during the year has to be clearly brought out. Under section 269, when we talk about promoter, the promoter is the person who's named in the prospectus and identified in the annual returns under section 92. Also, a person who has got control over the affairs of the company, directly or indirectly, and whether he's a shareholder, director, or otherwise. So the percentage change when we talk about in relation to a promoter, where the definition has been already spoken, is with relation to the opening balance taken as the base. So that is how the shareholders' equity has to be reported. Many listed companies have been reporting the holdings by promoters, but the percentage changed during the year. And the details of class-wise of shares probably is something which is an important disclosure to look at. The next thing is the statement of changes in equity. We are well aware that the movement for equity, share capital, and other equity has to be given, talking about the balance at the beginning of the reporting period, the changes in the capital. If there is any restatement of the balance at the beginning of the reporting period, that one, changes in capital during the year and the balance at the end. And when we talk about other equity, whether there are monies received in advance, various reserves and surplus, revaluation surpluses, and debt instruments and other equity instruments through comprehensive income. So these are some of the aspects of statement of changes in equity which require to be reported. When we talk about statement of changes in equity, the changes need to be disaggregated clearly. And the equity portion of the compound financial instruments, the effective portion of cash flow hedges, debt instruments which are fair value through OCI, and equity instruments which are fair value through OCI, and effect of any foreign currency translations have to be reflected clearly in the statement of changes in equity. The impact of changes of any accounting policies and any prior period errors which have been there have to be quantified and disclosed under each of the above heads. So it's a very detailed reporting of statement of changes in equity, and those are the requirements which probably are very important for somebody who would look at the balance sheet, not necessarily for an attestation purpose, but for a purpose of analysis or for a purpose of doing a review by regulators. These adjustments are very important for people to understand the base and substance of transactions. And that is why this requirement of each of these items being shown separately is being insisted upon. Although it's a lot of hard work, it is important to bring out to the stakeholders all these specific details. When it comes to loans for NBFCs, it is important to know that bills purchased, bills discounted, loans repayable on demand, all these aspects relating to leasing, factoring, and others, everything is displayed. A breakup of the total loan should also be given in terms of tangible assets, intangible assets, secured by intangible assets, covered by government guarantee, and unsecured loans. The next part of it is, after giving the breakup and after giving the loans under the various natural heads, the question of how they are measured, whether they are measured at amortized cost or at fair value through OCI, fair value through P&L, or designated fair value through P&L, this needs to also be brought about in the schedule. The impairment allowance, the impairment loss allowance has to be disclosed under each of these heads. There are extensive disclosures other than this, quantitative and qualitative, which are required on the financial instruments of an entity. And these would be covered in Division 3 in accordance with the NBFC regulations. Trade payables, which are due for payment. Trade payables used to be a single line item and MSME was the other aspect of it. But today, trade payables has got enhanced disclosure. Particulars of trade payables for the following periods from due date. So to say, less than 1 year, 1 to 2 years, more than 2 to 3 years, and more than 3 years. And this has to be given under the category of MSME and others, and disputed and undisputed. And similar information has to be given for other aspects as well. Kindly remember that trade payables is that which is due on payables for goods and services received, and other items which are not contract obligations are grouped under other payables, and they are under the non-financial liabilities. So this is purely related to trade and trading transactions. So similar information needs to be given in terms of the classification, where the due date of payment, even if it is not specified, then what do? Take the date of the transaction as the start date and then calculate the aging. Unbilled dues are supposed to be disclosed separately. Remember, MSME had a revised definition in October 19, and a micro enterprise is one which has an investment of 1 crore and a turnover of 5 crores. A small enterprise is one which has an investment of 10 crores and a turnover of 50 crores. And a medium enterprise is one which had 50 crores as investment and 250 crores as turnover. So remember this for MSME. The challenge is getting the details from the MSME, and the auditors have been using the word that as to the extent been possible to be collected by management to the extent available with management and so on. But here is cast a responsibility talking about the dispute and specific reporting, and therefore the auditors are facing challenges in terms of how they would be able to get all this information. To the extent available with management is the asterisk clause, which is seen in many balance sheets. We have to wait and see what's going to happen this year. Coming to property, plant and equipment. We all know what's property, plant and equipment, starting right from land and buildings, and then plant and machinery, office equipment, and right down. And we are all aware also what we studied right in the beginning when we learned accountancy, that bearer plants, which is cotton plants, grape vine and tea bushes, and other items which are biological assets are also part of property, plant and equipment, if that is the business. What would happen is today, while it's not just the definition and the classification according to which one, whether it's office equipment or whether it's plant and machinery, used to be a lot of discussion, and we used to look at a lot of ESC opinions and other things when we were article clerks to see how it has to be classified. But a reconciliation of the gross and the net carrying amount of each of the assets and corresponding depreciation has to be given. What is different in this? We have been giving a fixed asset schedule. Yes. At the beginning of the year, showing the additions and disposals, acquisitions through business combinations, any change due to revaluation, if the change is more than 10%, and other adjustments related to losses reversals. All these have to be disclosed separately. The adjustments column has to be split with specifics. It cannot have specific footnotes or information to the extent possible to be given, or as thought is enough to be given, is not the benchmark. The adjustments have to be explained in detail under each of these heads. And please note that it is now disposals and not deductions. That is the terminology which is being used. Assets under lease. We have to specify these items under each class of asset for leases and give all the information. Assets obtained or given on lease and the right to use also would require Ind AS 1116 additional disclosures. All the guidances are to be applied for investment property as well, which is held for fetching rentals or for capital appreciation purposes. So there is quite an enhanced reporting for PPE. The additional regulatory information which is required for immovable property is that title deeds which are not held in the name of the company is to be disclosed, other than those where the company is a lessee. Then the description of the item, the gross carrying value, the details of the title deeds, whose name appears in the title deeds, whether the deed and what is the relationship of that deed holder, the name in the deed, what is the relationship of that individual or entity to this company should be very clearly disclosed, and the date since this property is being held. If the immovable property is held in jointly with others, those details and the extent of the company's shares should be given. PPE retired from active use should be disclosed, and where it is revalued, whether it's revalued based on registered valuation. These are all the additional information aspects. Now let's look at why this has been done, because they would like to have a complete understanding of what fixed assets are there. If they are not in the name of the company, whether that information is required to be disclosed. As a matter of good practice, we have seen these footnotes, title deeds of immovable property pending registration. You'll find an asterisk and somewhere this is marked. I have seen these myself. But it is important now to specifically hold out the reasons, who is the holder, why is the name, what is the name of the person which appears in the title deeds, and the period for how long this has been held. All this information is required for people to scrutinize and to understand why this is taking a long time. Property is not defined under the Companies Act. So we go to the general clauses of 1897, where immovable property means land, benefits arising out of things attached to the earth or permanently fastened. So we are talking about PPE, investment property or not, and current asset held for sale. The above disclosures apply for all these cases. But if it's an inventory for a real estate company, then it doesn't fall under these requirements for disclosure. Lease agreements, if they are not executed in the name of the company, even that fact has to be disclosed. Capital work in progress. This is another important area. Capital work in progress, we are all used to having a lump sum figure. The last year figure is there, current year figure is there. If it is grossly an increase, many a time we spend time asking what is the reason and what are the details. It would flow from what is pending capitalization, or it would flow from assets which are still being worked upon. But beyond that, CWIP did not necessarily receive any attention, excepting the fact that the auditors used to check the CWIP pending capitalization when they allow the capitalization of other assets, so that you really know it is CWIP. But today, CWIP has to be given in complete detail for the stakeholder to understand what is the actual position of CWIP and does it really mean tomorrow's fixed asset. If it's less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. If something is in CWIP for more than 3 years, then the question comes to whether that has to be tested for impairment. And why is it there for more than 3 years? Projects in progress, projects which are temporarily suspended. So what is the position of those projects which are temporarily suspended? When we talk about temporarily suspended, the question is, what is the cost overrun after this temporary suspension? What is the position of the interest? Is it still being capitalized? Are there administrative expenses which are being incurred? The moment this disclosure is made, an auditor has to make sure that all the other relevant information is disclosed in other parts of the financial statements to remove any doubts from the reader's mind. Otherwise, if the information is just disclosed here and all these questions are unanswered, then it would open and give room for a lot of questions. For capital work in progress, where the cost overrun has happened, it is even more critical to give all these details and explain the reasons for the cost overrun. And it is a challenge for the auditors to make sure whether management has tested for impairment, because if that is not done and later on that asset becomes non-usable, then the problem occurs a few years later. And when the problem has started brewing, while it's in capital work in progress, goes unnoticed. By this process, one would know the status of capital work in progress right from year one. And that seems to be the rationale of this disclosure. Talking about revaluation of assets, it could be fair valuation of investment property, it could be on property, plant and equipment, including right of use, and revaluation of intangible assets. A registered valuer is one who has been defined under Rule 2 of the company's registered valuer and valuation rules 2017. It is important to report for any revaluation which is more than 10%. And where an external valuer has been used, the auditor will have to test the competence of this expert and make sure that he is a registered person. He's got relevant experience in this, and he is the registered valuer who has valued this. So we go by the respective auditing standard. Where it is an internal valuation by management, even if it's a registered valuer, even if it's a qualified valuer, the valuation done by an evaluation expert in-house, then the question is, how is the fair value determined under Ind AS 113? And one needs to make a note that this does not include the figures for fair valuation due to a business combination. This is talking about pure evaluation other than business combination. That is the situation about which this disclosure is relevant. Benami property. Benami property. Property which is a subject matter of a Benami transaction, including proceeds from that property. It need not be in property form, it can be proceeds from the property. A Benami transaction under section 2(9) of the Benami regulations talks about a transaction or arrangement which would mean a transfer of property held for another person. It could be property held for immediate or future benefit. It could be direct or indirect holding. It could be a transaction in a fictitious name. It could be an asset where the person denies the ownership or he or she is not aware of the ownership. Or it could be a property for which consideration was received or just a consideration received and the consideration provider is not traceable. And a Binamidar is the one in whose name this property has been transferred. So when we talk about what it is in short, that which is not covered, transactions which are not covered by 53A of the Transfer of Property Act. So when we talk about Binami property, if there have been proceedings which have been initiated against the company for holding any Binami property or Binami transactions under the Binami Transactions Prohibition Act, then details of the Binami property held, such property, including the year of acquisition, who are the beneficiaries, reference to the item in the balance sheet, the entire details have to be given. And if the property is not in the books, that has to be stated with the reasons. Where there are proceedings against the company, it need not be on a Binami transaction, it could be a proceedings as an abettor of a transaction or as a transferor. Even then, the fact that these proceedings are there have to be highlighted. When we talk about these proceedings, details, nature and status and the company's view, all this has to be given as a disclosure. So it has to be backed by legal representation. In case it's an in-house legal counsel, then how does the board look at it? What is the kind of details they have submitted for verification, and a confirmation from the management that these are the only transactions, or where there are no transactions, a confirmation that there have been no proceedings is probably required for the auditor to opine on them. Intangible assets. Goodwill has to be disclosed separately. We all know about it. A reconciliation of gross and net carrying value of each of the assets. Again, just like other assets, intangible assets also, they would like to have the breakup on how much is through business combinations. Many a time when regulators are scrutinizing large amounts, it is these acquisition of intangible assets through business combinations or through revaluation is where they find it difficult to find evidences or to be able to investigate in an independent manner. They would like this detail to be evident from the financial statements. And that is why the stress is given on how detailed this disclosure has to be. Any change and any other adjustments relating to depreciation on this or loss or reversals have to be disclosed. Other intangible assets, one has to disclose the brand, trademarks, and all those details. See, talking about software licenses and all others, like you'll have to disclose all columns like the PPE, the additions, disposals, business combinations, adjustments, and so on. In terms of contract assets, which are separate from trade receivables, and those which are other assets, other items, they have to be disclosed with all the details. Capital advances would be shown under other assets. Talking about intangible assets under development, just like intangible assets, even the assets under development, a mirror of CWIP. You'll have to talk about the story, the aging, the progress, the temporary suspension. If anything has been shelved, then whether that has been written off to P&L in terms of impairment, and then those under development where the cost has exceeded the planned cost, and suspension of activities. All these have to be given in detail so that the reader of the financial statements is able to assess the true worth of CWIP, intangible assets, both under development as well, and take a call as to whether these assets are really worth the figures which are there in the balance sheet. Trade receivables. When we talk about trade receivables, we are all aware that these are due to goods and services, and other receivables are those which emanate from other income. So when we talk about trade receivables, those are the details which are there, which have to be given. Particulars outstanding, just like your trade payables, particulars outstanding for less than 6 months, 6 months to 1 year, 1 year to 2 years, 2 years to 3 years, and more than 3 years. This has to be given in two main categories, disputed, undisputed. And then the subcategories under those two are considered good, considered credit impaired, those which have an significant increase in credit risk, and considered doubtful. All these four categories have to be given, and similar information has to be given for those where the due date is not specified, as we spoke in the case of trade payables. The date of disclosure will kick off from the date of the transaction, and unbilled dues have to be reported separately. Dispute has not been defined under Schedule 3 of the Act, so judgment has to be used, and dispute differences such as suit or arbitration have to be looked at for the existence or the possibility or otherwise. The evidence for a dispute would be probably corroboration of any form of disagreement. The loss allowance has to be given separately for under those four categories of whether there is a significant risk, whether there's a significant risk but credit is not impaired, whether there are credit exposures where the credit risk is impaired, and so on. The columns have to disclose the exposure, the loss allowance, and the net amount. The issue which arises here, if there are items which are more than 3 years old, why a provision has not been made or a write-off has not been considered. Where there is a significant increase in credit risk, what kind of provisioning has the client thought about? What is their policy? In case of dispute, what is the stage of the dispute and whether there are any items which are to be considered doubtful? All these aspects are silent questions which will come in once this classification is out in the financial statements. And therefore, one has to be very meticulous in disclosing the correct details. And as auditors, we will have to collect all the evidences for such disclosures. For loans given, so these are items which have to be disclosed in the same manner. First is the category of items, then how are they measured? Is it amortized cost, fair value through P&L, designated fair value through P&L? Then what is the security for the loans? Whether it's by fixed assets, intangible assets, unsecured, secured, covered by fixed deposits. And then the next is where are these loans located? In India, outside India. Finance leases, additional disclosures under 116 and Schedule 3 have to be given. Similarly, on credit risk on financial instruments, additional disclosure under AS 107 and Schedule 3 need to be given. Other financial assets, these would include inventories, current assets, investment property, and biological assets other than plants. So there aren't much of changes in these. Financial liabilities, debt securities under financial liabilities, that's the list of items which have to be disclosed, not very different from the earlier ones which I spoke to you. In terms of bonds, the rate of interest, the order of maturity, and particulars of any redemption have to be given. Liabilities out of securitization transactions were also required to be disclosed. In terms of borrowings, what you see in those squares are the items which require disclosure. The nature of the security is to be specified, the terms of repayment. If there is a default, what are those items which are classified under default? And deferred payment liabilities should also be explained. Finance lease obligations are to be disclosed. And again, measurement is on these three aspects which we spoke about earlier, and these have to be disclosed separately. What is important comes now. Borrowings from financial institutions on the basis of security of current assets. Where the company has borrowed from banks and financial institutions on the basis of current assets, it has to disclose whether the quarterly returns and the statement of current assets filed by the company with the financial institutions are in agreement with the books of account. Friends, this is possible and automated in many large companies. We are all aware in the medium and in the smaller companies, this is a huge challenge, either because of the lack of systems or because of the lack of strength in their legs to produce this information, the legs of the entity. Both being the case, it is the duty of auditors to make sure first to tell them that this requirement has kicked in and this applies from the first quarter. You can't go and correct the first quarter returns in the fourth quarter. That is enough to open the eyes of the bank and the lenders. So it is important to make sure that these figures emanate from the books and there are no Excel sheet adjustments. When this information is gathered and book entries are made quarterly, the books are closed properly and the returns are filled from the figures which are generated from the books. And because if it doesn't match, then a summary of the reconciliation with the material discrepancies have to be disclosed. And the auditor has to comment on this in the audit report. And therefore, this is an area which lenders would focus on in the financial statements and in the audit report. So a lot of education has to go in to clients to be disciplined and to ensure care and caution when they prepare these returns for submission purposes. Loans and advances in the nature of loans to promoters, directors, and KMPs, including those disclosures, they would like to make sure that the items which are repayable on demand or without specifying any terms or period of repayment have to be reported. The type of the borrower, the loan, the percentage of loans, the nature of loans, all have to be disclosed. These are relating to those which are not in the ordinary course of business. So it is important for this disclosure to again be checked thoroughly because it's a lot of sensitive information. Other financial liabilities. That is the list of other financial liabilities which should appear. That's more for your information on the form. And each of these items are self-explanatory. In terms of other non-financial liabilities, current tax liabilities, provisions, deferred tax liabilities, other non-financial liabilities, contract liabilities, and liabilities held for sale. The guidance note published by the Institute gives the details of these, which are fairly straightforward, and from the revised Schedule 3, there aren't any specific provisions which I need to bring to your attention, and that's why the slide is summarized in this manner. Investments, classification of investments, we are all aware of them. Further classifying them into amortized cost, fair value, we are also aware of this. When an NBFC uses a basis other than amortized cost or fair value, that should be shown under the column others with a footnote. That is important. And the loss allowance has to be recognized and the fair value changes have to be mentioned. Investment in subsidiaries, joint ventures, and associates. We know that for an entity where consolidated financial statements, these are to be disclosed where the entity holds investment in subsidiaries, investment in joint ventures. It shall include all the details of the respective line items. And in the case of investment other than a structured entity, what are those and what is the face value of the instrument has to be disclosed. Utilization of borrowed funds. Where the company has not utilized the borrowings from the bank for the specific purpose was taken. Details of how this has been used has to be disclosed. The auditor has a challenge because he's been asked to look at end use. Both the management has to confirm the end use as well as the auditor has to verify this. So if the borrowing has not been used for that specific purpose, so is it earmarked and kept separately? Needs to be very clearly brought about. Utilization of borrowed fund is an area which is of high focus among regulators because they'd like to know how the funds move in the company. A willful defaulter, a person or an issuer declared so by a bank or by a financial institution or a consortium in accordance with willful defaulters RBI guidelines is a willful defaulter. What is a default? A default is a default in meeting payment obligations or a default in meeting payment obligations and diversion of funds for other purposes, or a default in meeting payment obligations, a diversion of fund for other purposes, and the funds not being available as another asset. And then a default is also disposal of these amounts as movable or immovable property for securing a new term loan without the knowledge of the bank. So all these transactions come under willful default. So when a company is declared as a willful defaulter, the date of declaration and the details of default. When we speak about amount, it's fairly straightforward, but the nature of default has to be looked at from the 4 aspects which I explained. And what is happening now is auditors are, when they send out bank confirmations, they are adding a line in the confirmation saying that kindly let us know, is the company a willful defaulter, yes or no? So the banker has to emphatically confirm this. Where internally we'd like to scrutinize records, what auditors are doing is looking at the whistleblower records, looking at any hotline for complaints, and if they have had ombudsman and other fees paid, then scrutinization of those. And if none of them are there, it doesn't matter, we are happy about it. But even then, get a confirmation from the company secretary and the CEO that the company is not a willful defaulter. Many of the companies are including this as a note, as a requirement in Schedule 3 and is being signed as part of the financial statements. If it is not, so even if it is not applicable, the disclosure is being given by companies. Struck off companies, that's the next requirement. We've been looking at various software in the company law, corporate laws committee, wherein how we could get tools to assist auditors to do search relating to companies. And one of the benefits which we saw was that we can quickly lay our hands on whether the company is still active or whether it has been struck off. This is over and above the MCA search provision available. So struck off company, that which is under 243 of the Companies Act 2013 or under 560 of the Companies Act 1958, where the company has had transactions with companies which have been struck off. The name of the company has to be disclosed. That is information by the public notice and the Form STK under section 248. The nature of transactions, there is a form prescribed and details have to be filled up in that particular form. The balance outstanding, the gross carrying value has to be shown. It cannot be netted off. The relationship with the struck off company, whether it's a related party, what is it? What is the kind of stake? What are the relationships? What is the investment in securities? Whether receivables, payables, or other aspects which have been struck off. So is it the investments which we had in those companies, or is it receivable, payable, or what other kind of outstanding balances are there? What is the relationship with the company? That has to be evaluated under section 276, 2 subsection 76 of the related parties as at the balance sheet date. It's important to be confident about the relationship as at balance sheet date. This does not cover those which are under NCLT orders. When we do an ROC search, 100% search as auditors is not possible. So can we have a mechanism by which we decide as part of the audit methodology that we will look at this for at least for major transactions? That's what many of the auditors are doing, to make sure that they map the company identification number and the SIN number. And the next thing is to check whether the customer and vendor master has been updated and the KYC certification is given by the bankers. These are some of the aspects which auditors are looking for evidences. And I'm sure management will also be looking at these evidences. Registration of charges and satisfaction of charges, where this is yet to be satisfied or registered. Brief description, location of these charges, due date for registration and reasons for delay. NBFCs have been asked to report on this on an overall basis, but this is a little more detailed reporting. That was the NBFC, even existing regulations. We are still trying to grapple whether all the information required under NBFCs with such specifics have to be reported. I'm waiting to see some of the reports, what are the viewpoints our professionals are taking. Compliance with the layers of companies where companies have not followed those rules of holding company, intermediate company, and subsidiary company, where it's exceeded the 3 layers, there is a specific reporting required, giving the name and the SIN number of companies beyond the specified layers, and the relationship with the holding company and the extent of downstream companies all have to be disclosed. If at all there is one draconian requirement under the financial statements, is the disclosure of ratios. We all are aware what each of these ratios are there for. The current ratio, the company's ability to cover short-term obligations with current assets. The debt equity ratio, bringing out the financial leverage. The debt service coverage ratio, the ability to meet debt payments in cash. The return on equity, which is the measure of profitability. The inventory turnover, talking about whether there's a high, if the ratio is high, it's a strong sales, and if the ratio is low, it's a weak sales scenario. Trade payables turnover, the effectiveness in making sure that there is a liquidity measure and at the rate at which creditors are paid. The trade receivables turnover, where it shows the effectiveness in collecting receivables. The net capital turnover ratio, how well the company uses working capital to leverage its operations. So the net profit, which talks about the profitability, and so on. For each of these, and look at the requirements for NBFCs on the CRAR ratios. 9% is the percentage specified by RBI. And this is to promote and protect the solvency and stability and to protect depositors. So it would like to highlight how far the company has met the minimum requirements for solvency. And the principal and interest both have to be disclosed. What is important here is the company has to explain the numerator and the denominator for computing all these ratios. They should be easily traceable from the financial statements, otherwise easily computable. The computation has to be given. And any items which have a 25% variance over previous year, the explanation of the reason for the variance has to be given. When we look at aspects, any change in composition during the current year period, that change should get reflected in the previous year's period when we compute the ratio. And a footnote has to be put, otherwise they would be inconsistent. Items for inclusion in the numerator and denominator should be from sources such as your financial statements or regulatory notification guidelines. What do you consider in the numerator and denominator? Circulars, ratios which are of common parlance, investor reports, industry specific reports, and market research. Credit rating agency reports. Factors which are industry specific and company specific should also be considered, sector specific should be considered, and they should be consistent with the financial statements. I don't think an investor should look at the balance sheet P&L. All he has to do is to look at these ratios, and then he concludes whether his investment is safe or not. So this is a very important area. It's not a notes on accounts which can be delegated to a junior to check the accuracy. I would suggest each signatory to a balance sheet as an auditor has to apply his mind and link it with the financial statements to see what are the financial statements actually speaking. And that is very important. And that is the one strong message the Schedule 3 gives to the auditors. So additional information on scheme of arrangement of where the scheme of arrangement has been implemented, whether it is in accordance with the Schedule 3 and in accordance with the accounting standards, and whether it has been explained for any deviations. You are all well aware that these are now met with the requirements of the auditors certifying the scheme of amalgamation with the certificate that it's in accordance with the accounting standards, and that is produced in the court. But this is now a very emphatic disclosure, and therefore it removes all doubts about whether there were any accounting adjustments which were prejudicial to the interest of creditors or minority in a scheme of arrangement or amalgamation, it removes all these doubts from the investor's mind. For all current and ongoing schemes, the auditor has to certify this compliance. If the law requires a different treatment and the law overrides the accounting standards, that has to be explained. And that accounting treatment disclosure has to be explained. And the deviation also has to be explained and quantified. When we talk about utilization of borrowed funds and share premium, this is again an important clause. Friends, we have released a guidance note on this information, both for funds obtained, borrowed, and funds lent. Under Rule 11E and F, I was fortunate to be part of the study group which worked on this guidance note. It gives comprehensive guidance for auditors in terms of the steps to follow, in terms of the model disclosures which you should have in your auditor's report relating to these two clauses. These two clauses are now under the Schedule 3 to be disclosed by the company with all the details which are specified on the screen. The date and amount of fund advance, the amount which was further advanced to intermediaries, what are the guarantees and who are the ultimate beneficiaries and so on, and a declaration under the Foreign Exchange Act. The term intermediary is not defined under this act. So we have to go by the objective of giving funds as to whether there has been an intermediary passed through. Inbound and outbound both are to be disclosed. The advances in the ordinary course of business are not covered under these transactions. If there are pass-through transactions in the current year, the opening balance and its movements, and that which is received and passed on during the current year have to be reported upon with full details, identity, name, address, PAN, SIN, SSN number, relationship, and so on. Whatever is available with the regulators, all that information about the company and the entity has to be disclosed. It's the same thing for funds received by a company as well. Where the funds have not been used by any intermediary or not acted upon by any intermediary. How do we get a comfort on completeness? It's through management representation. And if you are not able to cite anything through the financial statements and scrutiny of the books and your application of funds, this is applicable to branches, group, and all those auditors who are doing the audit of these entities. It is applicable for an Indian foreign company, even with a business agent relationship or a funding party relationships. Even if it's funded from one to another, it is applicable. The disclosure and exceptions have to be covered as part of the details given for the benefit of readers. Borrowings is not covered in this as it comes under the borrowings clause. We have to agree it with Form MBP2 for guarantees, loans, and comfort letters. And for onward transmission of funds, a strict prohibition clause is very often used in agreements. The end use of funds is what people are trying to trace from these disclosures. And the ICAI guidance will be of immense use for members. You can download it from the website. Undisclosed income. This is directly from the tax assessments. So it is simple. Disclosure of any unrecorded income which has been covered accounted during the current year. A legal representation has to be obtained if there are external legal counsels representing for tax purpose. And if it is an internal counsel, then the question of getting a scrutiny of the internal records, the tax files, and then getting a representation and checking by the auditors, checking by the compliance officer, and reporting to the committees and the boards are your source of evidence. Corporate social responsibility, where the company is covered under Section 135, all these details have to be reported, including related party transactions, any shortfalls at the end of the year, and whether provision has been made for any liability entered through contractual obligation. The further amendments in CSR is very clear about what is eligible for CSR spends, what is not eligible for CSR spends. What is eligible is now research relating to COVID, R&D for vaccines, and expenses incurred for designing and implementing a CSR program. There are now regulations for how you would handle unspent CSR funds and what are the funds to which they are to be transferred within 3 years. And that's why you are asked to report all these details, the amount of expenditure incurred, the shortfall or the surplus at the end of the year. This amendment also covers how the surplus has to be utilized. There is also a cap on the excess CSR spends and the way you could carry forward any amounts which are spent to utilize for the next 3 years. The requirement for impact assessment, if the average spend is more than 10 crores every year. And that tells us in hindsight the need for this reporting requirement, because these amendments would be directly giving a benefit from this disclosure. These amendments can be tracked for compliance. There is a lot of requirement for mandatory disclosure and transparency. One could refer to those amendments, and there are strict monetary penalties both for the officer in default as well as the company. And registration for CSR activities also has become mandatory. Cryptocurrency, fairly straightforward. If a company has traded in cryptocurrency, then the question of the profit and loss, the amount of currency held, and the deposits and advances have to be disclosed. When we talk about the financial statements disclosure changes, I've given you in this slide. The first one is on rounding off, where the income is less than 100 crores, it could be rounded off to the nearest 100,000. Where total income is more than 100 crores, then the rounding off can be to the nearest lakhs. And then this is how it's explained. Total revenue is now total income. And then balance sheet talks about other current liabilities instead of current maturity of long-term borrowings. And then instead of security deposits, we start with long-term loans and advances, and then other non-current assets has got security deposits. When we look at the board's report, in terms of the changes which have been suggested, whether there are any bankruptcy proceedings under the bankruptcy code is something which is to be reported. And the difference in terms of any valuation done at the time of a one-time settlement and the valuation done while taking a loan from the bank, the differences. See, many a time there would be a valuation offered for bank for funding purposes, and later on there could be a valuation at the time of a settlement or an arrangement which would be different. So what is the reason for these differences? That variation has to be explained. In terms of the auditor's report, you are all well aware of these matters which are already being reported in the auditor's report since last year. So as I said, Rule 11E and 11F, these are the requirements for reporting, where I spoke to you about intermediaries, pass-through transactions, funding parties, and ultimate beneficiaries. So kindly refer to 11E and 11F for paucity of time. I'm not going through those details, but this is a specific requirement in the auditor's report. The next aspect, whether dividend is declared and paid during the year is in compliance with Section 123 of the Companies Act. Friends, there is a catch in this clause. All of us used to check dividend, transfer of profits to reserves rules, and check the disclosure in the balance sheet and look at the board resolution. We've done our job on dividends. That's not what the regulators are happy about. They would like to know whether the payment is in accordance with Section 123. When you have to confirm payment is in accordance with 123, again, the view you could take is it is the separate bank account has been opened and then the money has been deposited and it's been paid from there. Fine. The question is, when you are talking about payment, the corresponding receipt, and probably making sure whether funds were available on that date in the company to make the payment, whether the auditor has to talk about that. Well, the guidance could be very specific. We could quote that, but this could be a question which is asked on us because dividend declared and paid, the auditor is responsible to check it in whole sum as far as the dividend declaration goes. The next one on audit trail, you're all aware that that has been deferred to the next year. We were working on the guidance for this as well, but the AASB has released the guidance for 11E and 11F because this has been deferred. And we are working on this as a study group, and you would get the audit trail guidance later. So when we looked at this from an IT perspective, we were thinking on the lines that it is in relation to books of account, and it is only for those systems we should restrict ourselves to those systems which are reporting requirements under books of account to examine audit trail. But we'll have to, this is still being evolved, and we would get a detailed guidance from the institute on what to do on this aspect. Way forward, we need to prepare comparative information relating to the previous year, assess and make changes where it is important and where it is voluminous. An assessment to make the changes to the existing systems and controls is a priority for management. It's an enhanced set of reporting needs. Supporting systems are required. It's not that this information can be culled out manually at the end and then filled into the financial statements. No. Aligning with the new reporting requirements, there are quite a few aspects which are sensitive. We need to engage with senior management, and then they need time to examine the implication of these things and then come to terms with the new reporting requirements. The IT systems have to be stepped up, and measures have to be taken to make sure that this reporting from next year becomes automatic through the IT system. The key to brand success and self-definition is transparency, authenticity, and accountability. And what Schedule 3 amendments objective is to ensure that there is authenticity in the reporting we do. So I'd like to close with Simon Mainwaring's quote. And I thank people for this opportunity. We are at 3:30. I'm sorry if you are not able to take questions because this was the closing time given to me, and we were starting late. So what I would suggest is, if there are any questions, feel free to send it to Priya, and I'll be able to respond to it later. So conscious of the time, and I've tried to do justice within this limited time on this. I know it's a drudgery to go through the schedule, and this is the only way we could present it in a capsule manner. And thanks for your patient listening.
Thank you, ma'am. You're
Thank you, ma'am.
perfectly on dot on time. Thanks a lot for that.
As a trainer for 30 years, that at least I should have gained the ability, right, Priya?
So nice of you, ma'am. Thank you. It was really a wonderful session we've had today. I request CA Krishnan to present vote of thanks to ma'am.
Thank you, Priya ma'am. I would like to thank Madam Bhavani Balasubramaniam for such an insightful session. And I feel fortunate to be delivering a vote of thanks for such a session. If we look at the entire Schedule 3, as Madam has put it, a reader need not go through the entire financials. He just has to go through that one particular disclosure, which is ratios, and then decide whether his investment is safe or not. To me, that particular one is actually the height of transparency, which the Madam started and ended the entire presentation with the word transparency and accountability. And I think the height of transparency is that. And Madam, I will once again take this opportunity to thank you for such an insightful session. I'm sure we have a lot of questions, and we will send it through Priya Madam. Hopefully we'll get some help and answers.
It's my pleasure. I will try and address them to your satisfaction. And thank you so much. Despite the inclement weather, despite the peak season during this year, for so many people to be present, I'm indeed thankful and touched by your commitment.
Thank you, madam.
Thank you,
ma'am.
Priya, Geeta. Thanks, Satyanarayan and Srinivasa Raghavan. Pleasure to be with you.
Thank you.
Thank you.
Thank you, Bhavani madam. And I take this opportunity in requesting you that from the branch we'll be disturbing you on and off for some more presentations like this.
No problem at all, Priya. As I've told you that I have always been keen on giving back to the profession whatever technical knowledge I have, and I never get bored with these topics, or I never get bored addressing the profession.
Thank you.
Nice,
And
madam.
I only do it for the institute or for other business and commercial organizations. So I'm always available, Priya.
Thank you. Thank
We
you.
have also formed a small study group in the branch, madam. So we would like to invite you to address
Please.
our study group
Please, please,
virtually, yeah, at times. Yeah.
please. Thank you.
so much for your
Thank you
offer.
so much. Bye-bye.
Bye.
Thank you, ma'am. Bye, ma'am. Take care. Yes. So we move on to our next session. Today we have CA Padma Shri Castro, Madam from Mumbai with us. I request CA Sriram to introduce our speaker for the second session.
Ma'am, am I audible?
Yes, Sriram.
வீற்றிற்கும் அனைவருக்கும் வணக்கம். Good note to one and all. I, on behalf of Chengalpattu branch of SCRC of ICAs, is privileged and delighted to introduce the speaker of this session, Ms. Padma Shri Castro. Padma Shri Castro ma'am is a member of ICAI with additional degrees in the field of law and commerce. She is into partnership with MSKC and Associates, handling the audit and assurance functions of the firm. Having an extensive experience of 18 years into the field of insurance, marketing, financial services, and IT-enabled services, Padma Shri Castro ma'am takes care of her firm's statutory audit, tax audit, reviews, IPO and certification services, quality assurance, and risk management functions, in addition to technical support. She is a member of Corporate Law and Governance Committee of WARC. She is a special invitee to Corporate Law and Governance Committee of ICAI. She is a past member of SA, Ind-AS Committee of WARC. She is a past member of Corporate and Allied Law Committee of WARC. She is a technical reviewer to Financial Reporting Review Board. She is also a technical reviewer of ICA Awards for Excellence in Financial Reporting. She is a subject expert possessing intensive knowledge on audit tools, standards on auditing, quality standards, accounting standards, IFRS, Ind-AS, IPO related matters, company law, and other statutes. She imparts training program on various matters of professional interest, especially in the field of her expertise. She is a contributor to various publications, including Anthology on Key Audit Matters and Other Reporting Matters published by WARC, Model Financial Statements for Non-Corporate Entities published by WARC, E-Handbook on Roles of Chartered Accountant Firms to ensure compliance with SEBI Prohibition of Insider Trading Regulation 2015. I, on behalf of Chengalpattu branch of SARC of ICA, welcome Padma Shri Castro ma'am and thank her for accepting our invite to share her knowledge on professional opportunities for chartered accountants and under Companies Act and SEBI. Thank you, ma'am. Thank you all.
Thank you, Sriram.
Welcome to everyone. Thank you very much for providing this opportunity. Thanks to Priya, who has been in touch with, and we had spoken few times but have never met. But then that actually gave a connect to actually understand what's the requirement, and ensure that we land up on the right subject. Thanks, Sriram, for the introduction. So I'm happy to be speaking at one of the branches of Tamil Nadu because I happen to be a Tamil speaking person, but not an expert, not so fluent because I've been here from long time. But yes, I do watch a lot of Tamil movies there. So coming to the session, what we have today is basically, I'll just share my screen. This screen, the presentation that I'm going to put up is actually only a few slides presentation. There will be, less to read and more to talk, or less to actually write there. And there is more to discuss, more to talk. I have time for 1 hour, 15 minutes. Approximately last 15 minutes I'll reserve for questions because I expect a lot of questions here, and also to just share some thoughts, ideas. It's not only about questions, maybe everyone wants to share their thoughts, ideas, suggestions, whatever we can better at, if that's fine. So just to start off with, where are we today? we are in an era wherein everything is getting digitalized, everything is actually seamlessly available. Data is something that's more important, more critical. What is it that we are looking for? We're looking for transparency. As the learned speaker earlier, I heard only last few minutes, but then I think she was also aiming to look at and explaining the transparency aspect that is involved in all the things today. So taking all these things into account, and also when we are actually into practice as individual, as partnership, as various firms, what are the professional opportunities that one can look for under the Companies Act and under SEBI? I had a rough idea of what we are looking at, but when I started jotting down, I also started introspecting and thinking that, oh, there are so many things that are available. Good listing down. And, there are various avenues available. There are good things that have happened over the period, and there are bad things that have happened over a period. Just before we start, we all know that our country has gone through a tough time during COVID, and these 3 years have, especially the past 2 years, have not been a rosy one. There have been challenges for everyone, and there were difficulties. However, these difficulties have opened up wide doors to many opportunities, because now we are into a world of seamless working. We don't care who comes to office physically, because larger firms, larger companies, we all are on talent hunt. For example, someone sitting at Bhopal, someone sitting at Indore, someone sitting at a very remote place in, say, somewhere near Kodai, somewhere in Kanyakumari, can also work for any of the firm, because complete offline working is available. So complete work from home is available. Only for few trainings, maybe few days, you will have to interact, you will have to connect, and that is also online. Once in a year, you may have to have a meet. Otherwise, there is so much of freelancing available. There is so much of outsourcing available. So kind of, I have put in all these aspects also. When we are talking, we will again touch upon this once or twice. One of the things that I feel, another thing that I feel important before we start off is, like, we chartered accountants are very good technically. We are very competent in reading the laws, regulations, everything. But one thing that I largely see that we all have to develop is, it's not pointing out to anyone or even myself. I'm saying that one thing that we all feel that we have to gear up to, we have to step up to, is polishing our soft skills, is polishing our development skills. Those are very necessary, because without that, whatever degree we have, interpersonal communication and soft skills are very, very necessary for us to ensure that we stay very relevant and very very much in the loop. Another important thing before you go on to the professional opportunities is, today is the world where, after Companies Act 2013 has started, there has been a series of changes that has happened. NFRA has come into play. SEBI has amended the listing agreement and ICDR so many times. So, and there are other changes in other laws. There is a change that is proposed in the labor law. There is a change that is proposed in a banking law. There is a change that is proposed in insurance law. So anywhere and everywhere, there is, the only constant is the change. So change is the only constant. So we have to stay relevant. How do we stay relevant and how do we stay updated is most important. So as we are, one thing that we always say is that whether we are in auditing, whether we are in accounting, whether we are in tax, staying relevant and updated is always a challenge, because how much ever when two people are discussing some subject, you will always learn a new thing, because there will always be a new thing that will be there, and some update that you may have missed out and someone else knows about it. So sharing, networking, and actually collaborating more and more, discussing more and more is the key to actually develop some professional opportunities also, because opportunities cannot fall from roof. It all obviously gets into how much you interact with people, how is your interpersonal skills, how are your networking skills, and how much do you actually get involved into the activities. So it's obviously if I sit today here at my residence and just think that something is going to fall from roof and I can just start working on it, it's not going to happen. We all know that, and we all struggle for that. So that's why I thought that these few things will set the tone for this session, because this is less technical, but rather more of a freely interactive session. So please feel free to write your suggestions, thoughts, questions as it comes to your mind in the chat, and we can actually have a look at it at the end of the session. So what we have in table of content, what are the sources of opportunities, significant opportunities, role of CA in SEBI, Companies Act, and both. Actually, the opportunities of CA are clearly vast. The scope is massive. One of the things that I remember my tuition class teacher who has told me is that, you know, a company may have an engineer, may not have an engineer, may have a doctor, may not have a doctor, but every company needs an accountant. So every company needs an accountant, and if the company is bigger, definitely they will need a team of accountants, and then they will need few chartered accountants also. So there is no dearth of work that we will see, but identifying the proper ones and getting into the streams is something that is important. Apart from the traditional practice that we have had, you know, many people have come out of the shell. They are only doing consultancy, they are only doing training, they are only doing certain things that they can. As you know, earlier there used to be this stream of I will do everything. Now is the time when I will specialize in one thing. For example, I specialize in audits and all kinds of audits. So I have not been much in touch with tax from few years, but you ask any standard of audit, I will be able to discuss. So I think that's what is necessary. Specialization and adding feathers to your cap as to what you can achieve in that direction is most important. We as professionals are charged with ensuring good governance. So clients almost depend on us for many things. So at times we all know that in small and medium practitioner, when we go to the client looks forward for you as you are the one who is going to do everything. So for him, he is no less than actually putting up a photo and actually worshipping you at times. And if something goes wrong, obviously you are the one responsible. So it both sides of the coin exist, right? So you are the one who is there, who is doing everything. So you are the one who is going to promote good governance. You are the one who is going to promote IFC. You are the one who is going to tell them what mistakes they did. You are the one who is going to actually help them in preparing the financial statements by giving certain advices, and ultimately, you know, you are the one who are going to audit also. Now, keeping aside the conflict check, on a lighter note, I just said this, but there's, yes, obviously, if you prepare the financial statement, you will not be able to audit the same financial statements as per conflict of interest. But then clients look forward for a lot of advice from you, right? So that's where we stand. And we as chartered accountants play a very important role in the organization, and also we enforce and promote high ethical behavior, integrity, and compliance. That is how the society looks forward from us, and that's what they expect from us, that we will always display. And our profession and our institute also displays appropriate ethical behavior, integrity, and compliance from us, which is very necessary for us to actually meet. So that is where we stand in the profession. When we talk about when the person, you know, in particular, the person will have a significant impact on level and quality of the organization's corporate governance, the governance culture, and he will also play a pivotal role in assisting the board and to achieve the entity's vision and strategy if you are at that kind of a key role. So if we look at what are the sources of opportunities, basically there are lots of opportunities. We are not touching upon the tax and indirect tax and the due diligence part of it mostly, but we are mostly targeting the Companies Act and the SEBI part. In the Companies Act, the broad level of services that we call as statutory audit, management assurance, and consulting opportunities. We can further see what all we have in detail under these. So statutory compliance opportunity, statutory audit, we all know, so I'm not going very much into detail. Statutory audit as per Companies Act is very much necessary. So every company in this country has to get its accounts audited. So stat audit is a by default opportunity everyone can look forward to. Statutory compliance opportunities. What is statutory compliance? There are lots of compliances that are to be done by the companies, right? Filing and closures. Now, based on the threshold, full-time company secretary will be required in some of the companies, but not required in so many of the companies. So there are compliance opportunities like filing, helping in filing, assisting in filing, all these, and preparation of forms. So these are things that you actually do not involve much of cost at our end, because we are actually labor intensive industry. We harness good talent, and then we look forward for betterment in terms of the people. So when we look for resources, that is our major cost, as we know. So we kind of look forward for whatever fees we get. Irrespective of the fees, we have to give the best quality. So what is cost intensive and what is not cost intensive, it is necessary to manage that also, because at the end of the day, you also have to ensure that balance is stricken and you are not at complete loss. So that is something that will also be necessary. But irrespective of the fees, once you accept the work, you will have to give the best of the quality, because then there is no compromise on that. Also statutory compliances, lots of statutory compliances, labor law compliances, PF, ESIC, this kind of filing, calculation, and also the Companies Act compliances. Companies Act requires so many compliances to be done. So all those compliances, wherever mandatory CS work is not involved, many of the chartered accountants are actually providing these services, and I'm sure we all are always looking forward for it. Internal audit. Mandatory internal audit as per section 138 of the Companies Act is one side, and on the other side there are lots of companies who are looking for some branch audits, concurrent audits, continuous audits, inventory audits, stock audits, data's audit, specific area audit, certification, and things like that. So a lot of bits and pieces, process audits and things like that are always opportunities that are floating around when you have a company. It's not necessary that everything has to be at the company level. If the company is geographically dispersed and it has too many branches, and if it has too many arms all over the country, so we all can pick up any piece from there, and then and then we can develop that opportunity to get more branches. So internal audit is not only from the center, but then even branches internal audit or stock audits and all that kind of work is also possible. Outsourcing. Now, this is one thing. Now, when we are talking about internal audit, how does networking help in internal audit? Say today I'm sitting in Mumbai. My client has a branch in in the study circle in which this branch is there. So if I know a few of you, so maybe I will pick up and then ask for help from one of you to do the procedures and get back to us as the reporting auditors. So that is one of the opportunities. So that's how networking can definitely help us. Next thing, when we are talking about compliance also, so it is so much seamless, and every data is available online, and all these forms are also to be filled online. You don't need physical presence. You sitting at any of the place across the country, you can actually access the websites from anywhere, and you can ensure that the compliance can happen. You have so many facilities of secured storage like OneDrive, FTPs, and all those things where you can actually easily transmit the data, and you can ensure that secure data transmission is happening, so that there is no loss of data as well. Coming to outsourcing, this is the largest piece of all the opportunities. So outsourcing doesn't have to be at a scale which is very large. For example, a big IT company has to give 500 people outsourcing for you. There are multiple and smaller companies that are looking for work to be outsourced. Accounting work, vouching work, voucher punching work, even larger, larger company audits actually require so much of manpower that at branches we will need some help. Okay, this branch can someone else audit? Okay, this piece of vouching, can someone else do it and give it to us? So all the working paper, everything, all the formats are provided by them, and then you will do the work as a piece, and then it will get back and get incorporated. Then manpower outsourcing, like you are giving few of the people to the company for working as accountant or auditor, and then you get a margin over it because you have employed them, and then you can charge them per hour basis, per month basis, and things like that. This can be done at a very small scale, large scale, and super large scale also. There are consultancy firms which are only doing this. There are firms, actually even smaller firms, who are doing this, and there are medium-sized firms who are doing this. So there are giants also, sharks also, and the small golden fish also in this. So there is no end to outsourcing. You can actually so few of the examples like payroll calculation, putting up your member in their account, your team member into their the company's accounting team. Also during peak season, you are giving them few of the staff. These are various opportunities that exist in outsourcing. Certifications. There's a slide on host of certifications under Companies Act which are required to be done by auditor or non-auditor. Lots of certification opportunities. Additionally, bank also asks for lots of certification. One word of caution: please do not certify anything and everything only because a requirement has come from the client. Please ensure that the requirements are met. Please ensure that the format is met, because certificates are true and correct instead of true and fair. So you need to be more cautious about certifications. So when you issue certification, you please ensure that things are appropriate and then only certify. Also, the true copy attestations, which used to happen earlier, there is an ethics FAQ which says that you can't do that kind of a true copy certification anymore. So please get updated and get relevant. That is why it is important. So we all issue various certificates, but then it has to be in the proper format. And if there is a company given, if there is a statute driven format, then you have to issue a correct covering letter, you have to generate UD, and please ensure all those things are very much in place so that you are doing your work, but at the same time you are not held non-compliant also. So there are a host of certifications that are available which we will discuss. Valuation. So if you do few of the courses which are offered by the institute after after you have done your CA, then these opportunities can also be utilized, because under Companies Act, if you see, and in the earlier session, I think Schedule 3 got discussed. One of the requirements of Schedule 3 is wherever there is a valuation that is done by a registered valuer, that needs to be brought out clearly as a disclosure. And if it is not used, then the reason for the same. So these sections 62, 230, 232, all these sections require a registered valuer to do the valuation. And as a chartered accountant, I'm competent to do a valuation if I have passed the relevant exam generally. So that's another opportunity that you can look for. Due diligence. Due diligence is largely not cropping up directly from Companies Act. However, it's a subset of Companies Act, I can say. When there is a merger, acquisition, anything that happens, there is always a due diligence that happens. So due diligence ranges from financial due diligence, tax due diligence, operational due diligence. So the financial and tax due diligence can be done by us as chartered accountants. So due diligence is a specialized skill which actually can be developed, and then we can take up the due diligence opportunities, because these due diligence opportunities are huge in the market. Because if the market is good, there are good amount of mergers, acquisitions, restructuring that is happening, then you have a good scope for due diligence. Drafting the mergers and acquisitions, this is one of a niche service, I can say. It's not very freely available. So say, for example, if your company A is actually getting merged into company B, which is its holding company or a separate company, whatever, then advising not only drafting of the deeds, but also advising on the tax structure, future structure, what are the things that are going to be in the merged company, in the transferor company, in the transferee company, and also advise on the demerger, how it is going to work in terms of demerger, what are the nitty-gritties with respect to ranging from stamp duty advice on the document and on the sale of property and slum sale to the income tax level, and also if you're auditor, then issuing a certificate with respect to compliance with accounting standard. Mergers and acquisition actually opens up a number of services that can be provided by a chartered accountant subject to conflict of interest. So if you are an auditor, then you can only do a certification, you cannot do a valuation, you cannot write the merger acquisition deed. However, if you are not a statutory auditor, then you can provide several other services: handholding of the merger, preparation of the merger deed, assisting in merger, assisting in accounting the merger, or the demerger as the case may be. So there is a lot of things that you can look forward for. There is one more thing that is actually very much applicable to all the companies, is that in case if the company is in transition, or is it the first time adopter of any of the of Ind AS or IFRS or something, there is a huge opportunity with respect to divergence, convergence, not divergence, I'm sorry, convergence with the Ind AS or convergence with the IFRS. A lot of work needs to be done. It is not necessary that you become the lead converger or lead firm in terms of who will do the entire convergence, but then there is a lot of activities that is required. Preparation of the balance sheet before, after, making accounting memos, a lot of accounting memos, options chosen, exemptions taken. There has to be accounting memo for all these things. So if you develop your expertise and knowledge, these are the subsets of things that can be done in terms of Ind AS or IFRS implementation as well. Compliance function, few of the companies completely outsource it, and that's part of the statutory compliance as well as the outsourcing. So this compliance function can be very well taken care of by us, and ensuring that the timely compliances are happening. Filings, we talked about various filings where there is actually where CS is required, then his certification will be required, but otherwise administrative help that we can always offer for filings and other regulatory matters, we can always help the clients with respect to the same. A few of the other important services that we can provide, and we all are providing from a very long time, is that incorporation of company. Recently, I think incorporation of company and related documents were very much in news, so we have to be careful there. But then incorporation of company is one of the suggestions that we can offer. And second thing related to incorporation of company is MOA, AOA drafting, relevant certification, changes to MOA, AOA, all those services can also be offered. There's a third type of service that is also offered by few of the consultancy firms, which is actually they offer the registered office services. So many of these foreign companies, when they open up offices in India, they're looking for a place of business in India. So they generally rent out a place, and then that place is actually, they pay partial rent to the consulting person, and then that registered office address of that place is actually given as the registered office of this thing. But word of caution here, if it is the registered office, then all compliances with respect to registered office has to be ensured and maintained. So it is advisable not to keep registered office service more than 1 year, because after holding of the AGM, all the compliances come into play. So you will have to be a little bit careful there. If you have too many companies registered on one address, that's also a risk. So you have to actually think about what you are doing and think about how you are doing. Secretarial compliances, few of the services like, writing down minutes, registers. In a company where company secretary is not mandatory to be there, helping them in preparing the minutes, maintaining the registers, these can also be the service that one can always look for further. Corporate governance in case of a larger company, if corporate governance is applicable in case of listed companies, then corporate governance certification is something that one will have to do as per the SEBI LODR, because this is mandatory, and this can be done by CS or by a chartered accountant also. So this is one of the service that can be provided by chartered accountants. corporate governance structuring. So either you do certification or you do structuring. So what is the structuring? So readiness assessment, you can say. If a company is actually going into the listing, or if the company is already listed, and then corporate governance compliance and continuous changes and updating as per the SEBI LODR is one of the things that you can always look for, because corporate governance needs a host of standards and host of regulations and lots of requirements like number of independent directors, women directors, compliances, and so on and so forth. There's a lot of compliances that are undertaken there. So there can be a consultancy advisory in terms of preparation and presentation with respect to corporate governance. IFC, we all know this. After the IFC regime has come into place, there is a lot of IFC related matters that are actually picking up so much of pace. Say if the company gets into the IFC level because of the threshold that it has met in the last year. So one is obviously the audit opportunity if you are the statutory auditor. If you're not the auditor, then you can get in terms of preparation of RCMs, that is the risk control matrix, setting up the process itself. You can do the, if the company has set up the process, if the company has drawn the RCM, you can review the RCM. Company has to mandatorily do the testing of the risk and control. So you can do the testing on behalf of the management, and also the risk management matrix entirely, and then how the governance structure is, you can actually give an advisory on that. So IFC also has opened up quite a number of opportunities to all the chartered accountants, and there's a this process understanding, process review, and the entire preparation of RCM is a large chunk of work that actually gets outsourced. And also the testing in case of medium-sized companies and larger companies, testing of controls itself takes like 3 to 4 months, because every area, all the key controls you will have to map and test. That gives you a good amount of work. And if some other firm is doing it, and if they need staff, then there is a backed up outsourcing activity also that you can do. So it's not only that what I am doing. If I need more people, I will reach out to other people to get more people. So that's how this entire IFC piece actually is a larger opportunity, if you see. So if you are the auditor, obviously you are auditing, but then if you're not the auditor, then there is a host of things that can be done. There are various other audits also within certain types of companies or industries. For example, if you're a broadcaster, there are certain audits that are mandated by the broadcasting agency. If you're a telephone operator, then the TRAI mandates certain these things. So all these opportunities go hand in hand along with the type of the industry. Manpower supply, I think we talked about this. You can supply manpower services to manpower to the company to be a part of the accounts team, auditing, whatever. You can provide those services. And additionally, there is one more service that is offered these days, is that recruitment services also. So what is recruitment services? It's not just like a placement agency. They need people, someone at a, say, AGM, GM, or an accounts people. So they don't have competency to take an interview. So you take the interview for the position, and then you place them, and then you and risk is not yours, because they are ultimately taking the decision. So technical evaluation piece comes back to CA firms. These are like you are sitting here and taking the interview and telling the company whether he is technically eligible or not, because you know the company, and you say you are providing some consultancy services to the company, so you know the company, and they want to take a AGM, DGM accounts or someone like that. So you take the interview, technical competence you assess, suitability, fitment you assess, and then they will actually, from the HR angle, they will look into, and then they will either place. So here there is no risk, because you are not appointing them, you're only helping them making a decision. So this kind of service is also something that is very much looked at. Another thing that is there is that in case of the foreign companies who have recently set up their companies in India and all that, CFO service, that is also offered very often. Directorship service, CFO service, and office service. So registered office service. So all these things actually are offered in a package at times, So for a company who is newly incorporated in India and who wants to get incorporated in India, you will lend a registered office, you will provide a CFO service, or you may provide a directorship service also. So your person will be a director of the company for so and so time. Now we know that part-time, full-time COP, and we will have to accordingly ensure that the person who is a full-time director on the company is not a COP holder. So hand in hand, I'm just mentioning those restrictions also, or those kind of conflicts also, which we often face, because it's not only the opportunity that we have to jump at, but we also have to maintain our balance with respect to our professional ethics and other things. So CFO service and on-call consultancy service, these are most common these days as well. Another important service that we all can prepare is that we have always audited the financial statements, but then if we are not the auditors, then we can definitely help in preparing the financial statements. So Schedule 3, as earlier Madam discussed, it has got 25 new additions and disclosures. Companies who are of the small, mid-sized, and even a little bit large-sized companies who do not have such a large team of accountants are struggling to prepare the financial statements. So you can actually offer help to prepare the financial statements for them, to prepare the disclosures for them based on the information they have provided. And because you know the Schedule 3 well, you can actually suggest as to how the things can be prepared, and you can actually get involved in the preparation of the financial statements where someone else is auditing. And this is very common because the disclosures as per segment, as per AS 15, as per all these regulations these days are getting so complex that company doesn't have team or competency to do these things, and they outsource it because their accounts team is actually so much involved in the day-to-day activities, and they are actually processing the things, and you are only preparing the financial statements. So for this also you need to actually network more, you need to get the work more so that you can do, because obviously as per code of ethics you cannot do the audit, you cannot do the audit if you are preparing the financial statements. In terms of Companies Act certification, we spoke about, there's a host of certification that has to be done. INC8 declaration in case of incorporation, then DIR 3 attestation by a CA of this DIR 3 form. Then you have INC 21 application for declaration prior to the commencement of business, which you have to do. Then INC 22 notice of situation or change of office address of the registered office of the company. This is another service that you can, another certification that you can provide. Then INC 28 notice of order of the court or any other competent authority with respect to the same, that is another certification that you have to provide. Then MGT 14 filing of resolutions and agreements to the registrar under section 117. DIR 12 particulars of appointment of directors and KMP and the changes among them that you have to file. ADT 1, you can help the company in filing the ADT 1 if you are not the auditor. So these things that I have listed down here are not the certificates which have to be provided by the auditor himself. If you are the auditor, then obviously there is another window that gets opened for the certification services, right? Because if there is a merger in the company, you're going to provide a certificate. If there is any event in the company, you're going to provide a certificate for that. So that's another host of opportunity that actually opens up with respect to the companies which you audit. Also ASC 4 certification by CA in whole time practice for filing of FS with the ROC. Now coming to the other side of it, which is actually in SEBI, what all are the things that you can look up to. So as we know, SEBI rules and regulations are applicable to all the SEBI rules and regulations are applicable to all the listed companies or the companies that are in process of getting listed. So how is Chartered Accountant looked at in terms of SEBI? He is responsible for evaluating validity and reliability of the company's financial statement. He has to assess the risks, and he is the one who will help in preventing fraud. He will be improving the disclosures and ensuring that accuracy in reporting. SEBI also can order forensic audit wherever required. So you have to get empaneled, and then you will have to, ensure that you meet certain eligibility criteria. Then you can get forensic audits from SEBI as well. Integrity of audit reports also get checked by SEBI. You can offer that services also with SEBI. And finally, obviously, audit provides investors with additional assurance and helps them in making their investment decisions. So that's very important role of an auditor with respect to the financial statements of the public listed companies. What are the opportunities in SEBI? Valuation, again, under SEBI, for certain factors and for certain type of situations, you have to do valuation. Which are they? For example, merger, acquisition, share acquisition. Then you have to have a certified share valuation from a registered valuer as per Companies Act. Then what else can be others? Valuation in case of any takeover, in case of buyback. Then also you need a valuation. Corporate governance, wherever corporate governance is applicable, you can help in preparing the policies, procedures. So corporate governance is a very vast thing. There needs to be from BCP-DRP, that is business continuity plan, and disaster recovery plan, to everything. There is a host of things that is needed to be prepared by the company. So you can help in preparation and presentation of the corporate governance structure itself and updating these from time to time, because there are so many changes that happen. Recently also there was change in the CG structure. So all these things you can keep updated, and that's a vast service and an ongoing service continuously. It's not one-time service. It's setting up is a one-time service, then ongoing is a continuous service. Independent director, you as a professional even if you are holding full-time COP, you can be an independent director. So that is an allowed service. So you can be an independent director. You have to do the risk profiling of the company, and you can be an independent director. As you know, audit committee, if there is a listed company, if there is an audit committee, then the audit committee members have to be financially competent. So where does that financially competent people come from? From this profession. So that's where you can actually look forward for some services. Various types of consultancy, advisory, wherever required, because when as a listed company has to have a lot of compliances, there are lots of consultancy, advisory, and also there are specialized profession who only offer SEBI consultancy services. So there's a lot of consultancy and advisory scope that is very much available. IPO. When we talk of IPO, the latest one being the LIC IPO, a host of services can be provided. IPO is not one-day activity. You have to prepare for IPO at least for 2 to 3 years. Then only you are able to launch an IPO. First thing starts from whether you are a peer-reviewed auditor. If you are not a peer-reviewed auditor, then those financial statements will have to be audited by a peer-reviewed auditor. That's the requirement of SEBI. So from there, your service number 1 starts. That if you're not a peer-reviewed auditor, you have to ensure that if you are a peer-reviewed auditor and someone else has audited, then you get an opportunity over there for re-auditing the 3 years and then issuing your report and helping in restatement. You can handhold, advise, IPO full end-to-end. That is an expert service that you can offer. You can actually do some of the certifications. There are at least 20 certificates that are needed for IPO at various stages. Few of them, it is mandatory that the reporting accountant, who is the statutory auditor of the company, has to issue. But there are a lot of certifications that you can do. Shareholding certification, proprietary ratio certification, so on and so forth. So all these things you can do as an opportunity, sub-opportunity. Third thing, there are niche pieces within the IPO. So few of the things you can pick up. Something like 1 year balance sheet, and then preparation of the financial statement for the purpose of IPO can be another service. Then previous year's audits we discussed about. Full IPO as an audit, you be getting appointed as an statutory auditor, and doing the entire IPO itself is a larger piece, and the certifications thereon. So that's the larger piece. But behind that, there are so many things that the company has to do. You can do that. And then if there are complex and multiple transactions, you can even help in giving them accounting memos. So if there is a financial instrument, for example, you can make a 109 memo for them, that how this matter is dealt with. And then so you are working on behalf of the management, and company can actually present it to the auditor, who can actually look at the evaluation and the accounting of the said matter. So there's a host of services that can be provided under IPO if the company is going for IPO. Audit reviews, this we know, every listed company has to have limited reviews every quarter along with the audit. So we all know this opportunity that we can be an auditor and a reviewer for the listed company. Certification, again, SEBI requires certain certifications. Those certifications can be carried out by the chartered accountants. Preparation of FS, because these are larger company financial statements, that will also need an intense requirement to actually look into so much of details and actually looking at so many things in detail. So you can offer preparation of financial statement service also. Preparation of annual report. Now this is very unique, not very much available, but yes, you can make a place into it. If you are not the auditor, then you can provide this service. What's preparation of annual report? Annual report actually has a lot of things inside it. So CS always looks for someone who can do some proofreading, who can collate the data and who can look into it in holistic manner, putting up all the things, checking consistency, doing the proofreading. All these things can be part of preparation of annual report, and this is a service that few of the companies have started outsourcing to someone else, because they are also having too many things, and then they read too many things, then it becomes difficult for them to actually judge. So you can get into this kind of an opportunity. Review or proofreading of annual report is a specific service. Auditors have to do it because it's part of their job, but you can independently do it. You can be a third party who will be doing a review or the proofreading of the annual report, and you can suggest corrections if any. Sustainability services. So if everyone is aware, everyone will be aware very much that a new sustainability development board has also been set up by the institute. So sustainability reporting is one of the largest opportunities which are seen today. There are sustainability standards across the globe, courses offered by this sustainability board and also by the International Sustainability Board. And this is the future wherein you will not be only looking at so what we call as integrated reporting. It's not only financial reporting, but it is how is the company contributing to the environment or to the world existing as a whole. We are now not talking about Chennai as one place or Mumbai as one place and Delhi as one place. We are always talking about globe as one place. So when we are talking about the world as one place, sustainability is the next step, and there are lots of courses offered, and there is a lot of scope. This is an evolving area. Sustainability services are one of the key things that is actually happening kind of a thing. Litigations, yes, under SEBI, there can be certain litigations, certain queries, advisory, how to present this, how to present that, and SEBI sends you a notice or the company a notice, and then there can be litigations, representations in front of SEBI. All these things can also be done by CA up to the CSTAT level. So few of the important regulations. In case of acquisition of shares and takeover, you can obviously provide the services of certification and other things if you're auditor, and if you're an outsider, it's still certain certification services are to be required. Under ICDR, we talked about IPO. So many services are very much possible there under the IPO regime. LODR, various services under LODR, which are actually a series of services that can be provided under LODR. That's always possible, right from review to audit to certification to compliance to corporate governance, structuring, and also risk management. Again, corporate governance needs risk management and the structuring. So the entire risk management policies of the company and all those can be written and they can be revisited, and those can be actually very well, kept ongoing. So there are various services that one can offer here. A quick glimpse of what are the courses one can do to polish themselves to be a niche service provider, to get more professional opportunities of this course. I kind of listed on from the site or based on my knowledge. DISA Information System Audit, this will help you in ensuring certain certifications that you can do. For example, In case of financial sector, if it is a mutual fund or someone, then there are certain specific certifications that are required to be obtained from a DISA certified person or a CISA certified person. So that will help you in ensuring that. Also under IRDA regulation, you have to do an ISMT audit, which is an investor audit, or the risk management audit. All those things can be done by a IS auditor. CIA, certified internal auditor. Many of the companies these days are preferring internal auditor with a CIA certification. So that can bring a new polishing edge to us and ensure that we are in compliance with the institute standards there. And we can actually look forward for more work in that place. CFA, one of the opportunities, if I recall, this financial modeling. So when we talk about financial modeling, it's future modeling of the business. So lots and lots of Excel sheets with macros and things, and it's how do I say, it's not easy, but then it's complex structuring cash flows, discounting and all that for various forecasts and various kinds of necessary evaluation. Let's take a simple example. A company wants to do an ECL, recognize an ECL. Okay, expected credit loss on its data, and the company is into a very complex business. How will it calculate ECL? It will need some modeling. So that model which you develop will be can be done by a financial modeling. If a company has a going concern issue, some future forecasting, discounting, and all those things can be developed by financial modeling. And financial modeling itself has evolved over a period of time, and it has become a specialized service in itself. And there also there's a lot of outsourcing opportunity, because companies don't do it themselves, they always get it done from experts. So this is one of the areas that you can look forward for more work. CPA, if you are a CPA, there are certain states of US which allow you to sign from outside if you are a CPA certified and if you are continuing to hold your membership. Also, if you are a firm who is a foreign registrant, PCOB foreign registrant, you can directly do the audit, but then that's very complicated and you have to set up a lot of things to be PCOB prepared. You have to be PCOB prepared to do that. But then if you're CPA, then you can still get some of the accounts done where companies want to get the things done on US GAAP, US gas and things like that. That's an opportunity that's very much existing within India, and it can be done very well. ACCA for getting a polished outlook on IFRS. You can always get yourself certified as ACCA, because IFRS knowledge you can gain from here, or an India certification course also. Investment banking is another way. So NSE, BSc, NSDL, all these offer these courses. So you can be an investment banker, you can do that course and you can polish your skills there as well. CMA is another degree which you can actually, after fulfilling this, you can, in case of larger factories and things like that, people look for CMAs for cost management purposes. So that's another degree that can add to you. LLB, I think most of us are acquainted with this degree, because this helps us in reading the law better and understanding the law better. And needless to say that few of the chartered accountants are head of legal or head of compliance also in many of the companies. So that helps, because we have the ability to read and have the ability to interpret and actually take it forward. So that helps in polishing our skills well. Just to put up on the platter, what are the types of jobs that are existing in the market? There are part-time jobs that are available. So a few of the things, if I have to mention, even Institute has started with 2-3 years ago. I think it started with an initiative of women who want to come back to work, who had taken sabbatical due to personal reasons and due to family reasons. They have come back to work, and if they want to join the workforce, and if they are searching for part-time or full-time job, then they can very much register onto the portal, WMEC portal, and they can actually get some opportunities. That's possible. Because of the COVID, there are lots of part-time jobs that are open, freelance jobs also that are open. Full-time job, we all know it's all available in all the companies and the firms as well. Many of the firms are also offering a lot of part-time job to support them during the peak season and things like that. And then there is third category, which we all know, freelance assignment basis. So I don't have to be affiliated with anyone. I can do freelancing with everyone. I can take up some opportunities on assignment basis, whether at Chennai, whether at Madurai, whether at any of the places I think of. This is another thing that is very much widely open because of the COVID. So this is one of the good things that COVID-19 have done, borderless thinking and borderless working. So many of the firms, many of the companies open up nodal offices, what they call, or a location, what they call, wherein actually they don't have an office there, but then they source people from that place, because one, being in metro cities, it reduces the cost, and second, for the person in the interior who is actually of the best talent, he is getting an opportunity to work on some of the large clients which actually he could not have otherwise done. So best of the talents is there at every nook and corner of the country. And this has actually opened up a lot of scope for that, either a full-time employment or a freelance basis, because CV need not to be from the town where I am staying. I don't have to see them physically. You have so much of technology available, Teams, Zoom, WebEx, all these. So work is seamlessly happening every day, and actually efficiency output, there is no problem to it. So every talent that is sitting at every nook and corner of the country actually has this model has opened up the doors to everyone, and for the corporates and the larger firms to reach out to everyone, not even larger firm, I would not say larger firm, corporate or the all types of firms, to actually freely network and get work easily done and sourced from there. And people are also happy because they are working from the comfort of their home, wherever they are. They don't have to dress up and go to office every day. They don't have to travel, but they are getting the best technology. They are getting the very good approach, methodology, everything to be working at the place where they are. I think largely that's what I have to share. I have 20 minutes, so I think we can open up for the questions.
Yes, madam. It was really indeed a very good session. Do members have any questions? You can please post.
It can be questions, suggestions, thoughts, inputs, anything. So it's not necessarily questions actually.
In fact, what you said was very right and precise about the borderless thinking and working model what we have now. In fact, that is one of the main reasons we have been able to bring you for the session in Chennai here. So,
I agree. In a way that after this virtual mode has started, we could have, maybe we could have thought like, okay, session in Chennai, I have to travel for half a day, one day. Now it's like 1.5 hour session, and then immediately I can get back to my work. So that actually makes a lot of difference, and people are so much used to online things now. It's not anymore difficult to attend any online session or be a speaker in any online session. I think that's very appropriate.
Absolutely. So, ma'am, it's a small question from my side. How well, as chartered accountants, we should keep abreast ourselves with respect to these LODR and SEBI-related approaches, because they always look cumbersome right from our study days. So we have always left in choice most of these kind of topics.
Yeah.
And these kind of clients we hesitate to handle. So how do we really come out of all these things and we start taking these kind of opportunities?
Yeah. So I would like to say something here. Anytime is first time. So you have to get into it from bits and pieces. Maybe you don't want to start doing a listed company audit tomorrow, but then getting involved into a listed company, something like a certification, looking at one of the P's, getting into a consultation, getting into an advice somewhere here and there, doing an RCM for one of the areas. These are smaller bits and pieces which we can pick up. So say, for example, you are getting a RCM work for the entire listed company. You have 10 staff. I'm just giving an example. You are just having 10 staff, but then the company is larger. You're looking for more piece. So you ask me, you ask Sriram for help. So we send 2 people to you. So those people learn, I learn from you. And then I can put it as a credential and then take a next step. One of the things here is that we have to get through, we have to network, we have to actually break the ice, and we have to try and try. If we do not try, it's difficult. And if we hold back ourselves saying that this is going to be complex, we have the ability, we can read, we can interpret, we can look at, and not like 15 years ago, you have so much of material available on the web itself that you can take guidances from there. Today you want a limited review report, you have everything available, from a firm in Chennai to a firm in US also, everything is available. So we have to put a lot of time in research initially, and we have to do a lot of consultation. And after that, only we will be able to develop the skills. But if we stay away thinking that, okay, this is complex, let me not touch it, it will always be complex and you will always see it from far. When you are when you are giving reports, and when you have to actually sign a report, you make 100 references. You check from SA, you check from SRE, you check from some other auditor's report, you check from the SEBI format, everything, and then you do a mapping. Okay, how are they writing? What am I writing? What is it that I'm writing? There's so much of and if you're doing a statutory audit of a listed company, you have to write a CAM. How to write a CAM? There is a complete anthology available, published by WRC, in which almost 300 companies, separated by industry, separated by type of CAM, qualification, EOM, everything is in available readily. So you can look for references. How to write a CAM on revenue, you can have reference from there. How to write a CAM on impairment, you have a reference from there. And you have to continuously keep interacting. Otherwise, how I see it is that if we do not interact, if we do not open up, then somewhere we are getting obsolete.
Well said. Very well said.
Madam, I have one doubt actually in merger and acquisition process. Okay, because I have some books also, something I just gone through something also. As an initial practitioner, like as an individual or whatever the partnership which has been starting initially. Okay, how to go about this merger, acquisition, and other like takeover procedures, these things and all. Like, what are the opportunity we can face on this actually?
Yeah, so starting from whether you can be a part of the merger process itself, drafting the scheme and things like that. So court has published many schemes. You can actually download few of the very large companies schemes as well as very small company schemes, and it's available in public domain. You can look up for how the schemes are written if you want to go for drafting. If you're looking for accounting, there are lots of illustrations that are available. You have to approach the company for certification. You have to approach the company with respect to, so through your networking and other things. So you know how the opportunities also emerge is that we have to understand one of the things that we can understand is that what I'm conflicted to do, which actually I cannot do, but I can, refer someone. It's not for fees always, obviously, right? Because referral fees is not allowed. But then if I am an auditor, okay, I'm a statutory auditor today. So I want in your city, I have a branch. I have to identify, okay, today I've got contact of Priya. I'll have to call her and ask her that whether you will be able to do a stock audit for me, right? So next time when she has something, she will obviously speak to me, right? So that way, we can actually look for more and more opportunities.
It's sustainability services you're talking about right now. So how to go about the sustainability? Because you said one courses, like there is one some courses are available with our institute also. Like after going to the courses, like what are the things we need to update ourselves, like from that particular scenarios?
So sustainability reporting is very new on the block. Very large companies, international, MNCs and all have started publishing sustainability reports. So sustainability reports it is about energy efficiency. What are the things that the company is doing for the betterment of the world as a whole. It's not only CSR, it's beyond CSR. How am I ensuring that Earth is a better place to live? What are the emissions, making the carbon emission zero, and so on and so forth. Lots of things, afforestation, deforestation, how am I managing all these things. And this sustainability reporting and integrated reporting is a very large thing. Institute has a sustainability board. There are few courses offered by Institute's board also. And these are things that require elaborate reporting and preparation also. So sustainability is not like today I'm saying no to plastic. That is also one step towards sustainability. So there are various things that companies do to ensure that the earth becomes a better place to live, because there are industrial hazards that are created. So they are trying to offset that with certain things. Some people are statutorily mandated to do. For example, mining companies supposed to restore the land where they mine after so many years, right? They have to create the afforestation there. So that's a mandatory thing. But beyond that, they can do many more things. What are the things that they are doing? So these courses actually give you a complete insight onto what are the things that you have to look into and how to actually get connected to these spaces and how to actually acquire knowledge on this. And that's the future, and that's going to happen because few of the Indian companies have already started doing an integrated reporting, and it is slowly and steadily picking up pace. And there are very few people in India as of now who are actually able to talk about sustainability and who are actually knowing what is to be reported end to end.
Can you talk something about forensic audit also, so that also will be supporting our team, because we know something like because for the initial people who just been in practice, okay, like what they do need to do and other things, and they can understand.
Yeah. So forensic audit per se, I'm not an expert, but then, based on my experience, I can let you know that forensic audit is also one of the key things these days. Digital forensics and, detailed forensics are something that are on the block. You can get empaneled with various authorities like SEBI, CBI, even police departments to do some forensics. So Vice Police Department, it's also possible. So one of my acquaintances or friends in one of the cities is a chartered accountant, practicing chartered accountant, and she has got empaneled with the police department of the state, and then she is getting like quite a bit of work from there. So there is a lot of data that they get in case of criminal or civil investigation. Who will process that data? And there are financial data. There's so much of EOW, that is economic offense wing, ED related matters, all that stuff, everything that happens. So in all that, there is requirement. You have to continuously keep an eye towards the tenders, towards the empanelments that happen. SEBI has an empanelment, CBI has an empanelment, RBI has an empanelment, IRDA has an empanelment. Every government department will have an empanelment. You have to get empaneled. You have to check your eligibility. Even if you're not eligible, you're going to get rejected. Look for your eligibility and how to become eligible. Okay. So today you are 2 partners. You're not going to be eligible. Then take up the next step. Whether if the eligibility is like 3 partners with 1 partner having a CISA DISA knowledge, you can't get him tomorrow, but then make a plan towards it. Yeah, make a plan towards it as to how you will become eligible. You have to have 10 employees. Today, I don't have an affordability to have 10 employees, but how can I make a plan to go forward? So checking eligibilities and making Excel sheets with respect to and achieving tangible goals is the step. And for forensic audit, you need the expertise. So you need to get the course done, and then you need to have some. So you again pick for some of the engagements where they need people, and you become the part of the engagement. That's how you will gain experience. Next time, then you can do it. You can teach someone. Many of the things, it's not that I have to start. I may not be the inventor, but if anyone is working, then I can join them. If I got a smallest of the opportunity also, make the biggest use of it. And next time, that can be your credential and that can be your base to start the next one.
That's right, actually.
Wonderful, madam. Are there any more questions?
I think there was one question someone had written, how to approach for freelancing or assignment based work if I have some time as a practitioner. Yeah, there's a lot of freelancing that is available. There are websites actually which offer freelancing work itself. ICI portal also applies, has got some job opportunities for part-time and other things, which you can even pick up as freelancer basis. So, and also networking is most important. That's when I said that identifying that I'm if I'm conflicted, then I can refer to someone is something that we all have to identify. Like, I can't do everything. If I'm start auditor, I can't do internal auditor. So obviously in that company, I know there is an internal audit requirement. I can definitely refer to someone. That's how work will grow, and that's how the network will grow. It's not for referral fees, but then as a good colleague, if I know, then I can obviously refer work, and it's ultimately the decision of the company. So it's only competency referral. It's not for money. So those kind of referral and networking can increase your work. And there are lots of websites which offer freelancing work as well.
I have one more thing, madam. Like because, and I don't want to be in routine things a lot, because you have said some list of items and all. As you said, like corporate governance structuring, like BCP and DRP. Can you explain about like some, because we need to understand like what type of opportunity inside to that particular scenario, like BCP and DRP. When you talk about that, like what are the things we can get into that actually, apart from a normal practice?
Yeah, so one of the things that corporate governance as per SEBI LODR requires you to do a succession planning and a business continuity planning and a disaster recoverability planning. Many people, when they understand BCP, DRP, they think that it is only IT related stuff. If my servers crashes, where will my systems work from? It is not limited to that. That is definitely there. If my server crashes in Mumbai, where will it work from? It may work from Chennai, it may work from Dubai, it may work from anywhere. Right? That's a separate thing. But then every company has to have a succession plan also. So there will always be, if you read the CG report of any annual report, if you open any annual report and read the corporate governance things, it is always written that the company has a valid succession plan. So how is that succession plan is made? So these days it is not that if I am the one who is ruling the set, if I'm the promoter, then only my kids will become the next board members. That's not sustained. That's not succession planning, right? So succession planning is the competency of the personnel. Where is he coming from? What is it? How is it? How will it be evaluated? Who will be the one who will be working in the interim, and all that. So there are steps that are given. Based on those steps, then you will have to decide as to how the sustainability has to be actually succession planning and the risk management policies there. When we talk about business continuity plan, it's not only about the IT risk, it's about various risks, right? One of the incidents that most of you must have read is that in the bomb blast that happened many years ago, 4 directors of the same company died. So they must have made a BCP for 1 director dying. Out of the 6, 4 died. So that was there in the newspaper everywhere and things like that. So what do you do in such cases? How do you run the company? That's something that would be important to see. It's not only about the risk, it's not only about the IT things, but it is non-IT things. What is the risk management? How will the company run the risk? How will the company identify the risk for the business? How will it make a policy to ensure that business is continued? Disaster recovery, if something happens, how will you recover? It's not only about IT services. It's about all these kind of disaster recovery also. If 4 of them die, how will you recover from that shock? Because your company is there, you have contracts ongoing, you have legal obligations, you have to do the supplies on time, you have to meet the customer's demand. Everyone will have sympathy towards you, but then they will sue you also in the court of the law for non-performance, right? So these are many matters, and also the risk of the company, industrial risk, business risk, external risk, political risk, all kinds of risk that will be there. And what are the important ones to be identified? For example, if a company was in manufacturing of a certain chemical, because it was extremely hazardous to the environment, it got banned all of a sudden. What will they do next? Will they shut off the company, or is there any alternate source? So if it is highly regulated, you will have to have these in place. If it is a bank, then obviously you will have RBI inspections. You will have to be ready for the observations. Who will resolve that? What are the things that are done? So all these are actually part of the larger corporate governance. So setting up these policies itself is not a easy task. You need expertise, industry expertise, and things like that. And you will need consultants there.
And one more question actually, throw. Can you discuss about something like arbitration and mediation? Sorry.
I'm not an expert in that field, but arbitration, I'm not an expert in that field. I don't have a very detailed understanding of that. So I don't want to just unnecessarily speak something which I don't know.
Correct. Okay. Right. It's really a nice section, madam. Actually, like when you gone through that initially, when we talks about like RCA, okay, we used to be only thinking in our mind like only like income tax, GST, Companies Act, only little things we'll think. Okay, as a traditional practice, we'll start with that only, like GST filing, income tax filing, etc., etc. After discussing like when I just discussing in the initial morning session, okay, like Schedule 3. We have been discussing like all compliance part, etc., etc. We have been thinking our tradition again. We have to think about our tradition only, like what to do for the upcoming audits and all, like what are the procedure we need to follow, and what are the things we need to update ourselves, and what are the things we need to learn, and what are the recent requirements like that. Madam has explained very clearly, like we have to go through these areas and all. When I just come back to you, like. When you're listening to this topic, like we are saying about the complete professional opportunity, like we thought that okay, this is a professional opportunity, you have to file the returns, you have to go ahead with this, etc., etc. Like you have a lot of like, it's like my head is like, it's like full of things actually. Now couldn't come out with that. So when it talks like you're talking about the complaints also. See, when any companies, we have to look on two scenarios. One is like top, and one you have to look on the bottom. Top in the sense like share capital. Another thing is you have to think about the capital of the company, and you have to think about the profit of the company. Like when it talks about capital of the company, you have been discussing more about like there are like mergers and acquisition, investment banking, SEBI's like acquisition turnover, etc., etc. SEBI ICDR, IPOs, valuations, etc. Like lot of things. Next, if you come back to the operation activities, you're taking like cost analysis, like operation activities like BCPR, DRP. And those things also, we have a lot of opportunity over there for the CAs and other things and all. And when I talk about the compliance also, like forensic audit, like visa and other things, and like a lot of things are there. As rightly said by Ratan Tata, like MBA can know how to running the business, but as a chartered accountant, they will teach to them to how to run the business actually. Like RCA, we have a lot of opportunity. We have to search for the opportunity, and we have to look on the opportunity, and we have to go ahead with that opportunity. And it's really a nice session. It's really great. Thanks on behalf of the Chengalpattu branch. Okay, we thank you, ma'am, for this wonderful session, for this such an interactive session also. Like, what are the things we have been throwing to you? You have been like clearly explaining about like this is the thing you have to do, this is the thing you have to do. You are just teaching us.
No, it's just sharing of experience. There's nothing teaching here.
No, really, see,
that I've met the expectation.
No, as being an expert in certain fields, okay, when we listen, okay, what are the new areas which has been come across? Okay, somebody which has been teaching to us. We have to be like a student. We are not being even a chartered accountant. We have to like look like a student, and we have to understand the basic topics like what we have to learn, what we have to understand. Because in as MP also used to say, we have to continuously learn. Okay, for the lifelong, we have to learn as much as possible from the various person, like various expertise, various other things and all. So that's the reason I'm just saying to you. And it's really thank you, ma'am. Thank you, Padmashri, ma'am, like for this wonderful session. Okay, right. Now I just go ahead with the word of thanks. Okay, for this program, for this session. Okay, a big thanks to our Chengalpattu chairman. Okay, C.A. Satya sir. Okay, for this wonderful. That is while organizing, he keep on updating ourselves actually. Like initially when he talks about GST, okay, come to GST. You attend this program. There's a 5-day session. You go ahead with this program. It's really exciting. Like we have been understanding each and every day, like different scenarios. Okay, with the help of like our CCM Rajendra Kumar sir. He just supported like complete program. He just organized a team. And number two, like next we just gone for the residential program also. It's also like a wonderful session. Like we got continuous update, and now it's like this program like it's 5 days on corporate law. We have been continuously updating, and real great thanks to our CS Satya sir for this organizing this for this wonderful program. And a main important thanks to our Padmashri ma'am, okay, for this session. Like it's like interactive and very learning perspective from our end. Okay, thank you for you, ma'am. And it's my pleasure to deliver the words of thanks on behalf of the Chengalpattu branch. Okay, to all CCM, CST Priya ma'am, and RCM Sundarajan sir, and ex-officio of Chengalpattu branch of SARC, and all our managing committee for this coordinating such a wonderful program. And I need to say the special thanks to two of them actually. One is like Nasimha Raghavan sir, as secretary of Chengalpattu branch, and a special thanks to CA Priya ma'am, okay, for coordinating this with all, okay, including each and every person's like she had been coordinating with me, she had been coordinating with our chairman, everyone she coordinating and organizing this such a wonderful program. And we just give a special thanks to our there is CA Priya ma'am, and a special thanks for CA Geeta ma'am actually, okay, committee chairman, like corporate law committee chairman. She made this program, like organizing the program such a beautiful manner. It's not a end actually, it's end for today. It's going to be continued for next 4 days also. It's and I need to tell you, like tomorrow's session, it's a very important topic for our practice as well as for the corporate peoples. Okay, it's like overview of the LLP incorporation to closure, okay, by CS Amit Gupta sir from Lucknow, and also CSR complaints and amendments, okay, by CA Redmi Dubey from Delhi, okay. And right now we just hand over to CA Priya ma'am, okay, to complete the session. Thank you, ma'am.
Thank you, Yuvamurthy. In fact, your vote of session has been a big session by itself.
Sorry if I taken more time for that actually.
No, sir, absolutely, sir. You have all the freedom, sir. Thank you. And thank you, Padmashri. You've been doing really a wonderful job. I'm sure we'll be asking you for some more sessions, wonderful sessions like this. And thank you all members on behalf of Kanchipuram branch. We hope for the same attendance for the rest of the sessions as well. Thank you. See you tomorrow afternoon. Thank you.
Thank you. Thanks to everyone, and special thanks to Priya.
Thank you.
Thanks a lot.
Thank you, Geeta ma'am. Yeah, thank you.
In the session close.